Good morning, everybody. Welcome back to another episode of the Market Close. It is Friday, May 16th. We are at the end of the week, and what a week it has been. Literally, what a week it has been with the momentum that we've seen in high-flying names like Nvidia or Palantir or Robinhood. I mean, the broader S&P 500 breaking 590 yesterday. It's just been a pretty good week in terms of stock prices after a pretty bad month that we had when it came to April. Did I say market close? Did I say market close? I meant to say market open. Yeah, am I already done with Friday? No, it's a market open. We got a lot to talk about, a lot to get into. Dude, these pre-markets are kind of wild, and I don't really know why we're green as much as we are. Robinhood's at 61.35. Nvidia's at 136.50 in the pre-markets. Again, I don't really know why. I have one theory from a macro perspective why everything's so green in the pre-markets, and we'll talk about it in a second. But we're green. SoFi's at 13.73, Palantir 129.30, Amazon's up $2, Google's at 167, Grab's at 513. You got AMD at 117, up 2%. I mean, there hasn't been any like magic CPI, job data, PPI data, anything that's creating this type of momentum. But we're green. We are pretty green. I don't think it's because of the UAE deal with the chips, because that was announced a couple days ago. I don't think it's because of Sundar's new interview, although that interview is a bit more bullish when it comes to Google. The reason I think it's actually this green in the pre-markets right now, quite frankly, is because of the 10-year. 10-year's actually fallen down. 10-year's actually falling down. It was at 4.537 yesterday. Now it's at 4.392. Why is it falling down? People are obviously buying bonds. Why are people buying bonds today versus on Monday? I don't really know, quite frankly. And I think that might be creating some of the momentum we're seeing in the pre-markets right here that's giving us some nice action. But in terms of anything fundamental, I don't really see it too crazy. Now, there is this headline that Nvidia is planning a Shanghai research center and a new commitment to China. That's fine, but that's cool. But ultimately, the United States needs to allow Nvidia to not have the export controls in order to sell their chips into China, right? So even though sales are being hit by the export controls, the chip makers deciding, hey, let's expand our presence in the country, which is fine. That doesn't mean they're going to be able to monetize that in a meaningful way by being able to sell chips if they're just not allowed to. So I think it's good, right? Like that's a bullish headline, but I don't know if that's the reason for why we're getting this much green in the pre-markets. S&P 500 right here. Yeah, 591.60, breaking above 590, which is not bad. Who knows? Maybe it's going to be a green Friday. Maybe we're going to get a little bit of dumping of the screen a bit later, but as of now, it looks really nice in the pre-market. Thank you, everybody, for being here. Good morning. And we got a lot of headlines to get through in terms of what has happened over the past 24 hours, because it has been a pretty exciting 24 hours in regards to different macro headlines and also in regards to what the hedgies and the super investors are doing on Wall Street as well. So we've got a lot to talk about from that perspective here today. Good morning, everyone. Thank you all for being here. For real, what's up? I'm Beneficial, Abhishek, Brandon. Archer are we at all-time highs on Archer? ARCH. The founder was on Jimmy Fallon last night. Archer up 8%. All right, shout out to Jimmy Fallon. Got some people interested in Archer. Good morning. Victor, what's up? Broccoli Bob. Bay Ray, the TLT calls are safe. I think TLT calls are going to be okay because I think rates are going to eventually come down. They're cooked right now. But I do think TLT has a shot to hit 100 this year. But, we need at least 75 bips of cuts. So it's going to take a little time to get there. But I think we will get there. Bolu, what's up? Gene, what's up? OPEX day as well. So that could be another reason, that could actually be more of a sinister reason. We have $1.4 trillion of options that are expiring. That's why it's called OPEX day. It's not quad witching day. There's not simultaneous certain options expiring, but there are a lot of options expiring. And so maybe the market makers are kind of pumping the markets in the pre-market to get people excited, and then they're going to take it down in a few hours as all these options expire. But that is one thing that could be affecting and creating a little bit more volatility today. Andreas, what's up? Joseph, what's up? Peggy, good morning. Dallas, Kevin, Ali, Terry, good morning. Thank you for being here. Aaron, Christopher, Jerry, Brandon, Martin, what's up? When do you move into your new apartment? August 7th. So August is going to be a bit of a busy month, but we will officially be in the new crib in August. And looking forward to taking all of you guys there. I think it'll be fun. It'll be super, super fun. All right, let's get into it. Let's get into it. Again, good morning, good afternoon, or good night to everyone across the world. I really, really appreciate everyone being with me here today. And we got a lot of headlines to cover. So let's start off with what's going on with the hedgies. We got a bunch of updates in terms of 13Fs and 13Gs. If you were on the market close yesterday, I didn't even know the news was breaking, but at like, call it 4:15 p.m., all of the news started breaking. And we had David Tepper, Bill Ackman, Warren Buffett, Ray Dalio, all these guys. And we got to see what they're doing. So let's start off with them one by one and talk about what they did in the second quarter. And I would love to know everyone's thoughts as well based on all these different actions we got. So first off, we got Michael Burry. He sold everything in Q1, literally everything. And he went long Estee Lauder with 200,000 shares. He is betting on makeup. But not only did he go long on Estee Lauder, he also went short. Now, he could have covered these shorts by now, but he has 900,000 shares worth of Nvidia puts, 200,000 shares worth of Alibaba puts, 200,000 shares worth of PDD puts, and 400,000 shares of JD puts, all of these Chinese companies that he was long on like a year ago. Now he's shorting them. And then he has some puts on Baidu and Telecom. He's only long Estee Lauder. My interpretation of this is like, it's almost like a meme portfolio where he's trying to tell the market, hey, I'm so bearish and I think there's such a big recession coming that the only thing I'm going to buy is this makeup company, which I probably don't even have a thesis around. Maybe there's like some China thesis around Estee Lauder, but I think the big argument here is like, hey, I think a recession's coming. And, you know, if you know anything about the kind of makeup recession thesis, he thinks women are going to buy more makeup in a recession. And as a result, he kind of just bought some random makeup company. Maybe there is some thesis around the name, but Elf, Ulta, like he could have bought any of those, but he chose to buy that one. So yeah, that's your first 13F that got disclosed. Michael Burry, obviously very bearish and basically saying, you know what, I'm selling out of everything and going into Estee Lauder. And again, I will say this for the third time. I had to say it 2 times yesterday on the close, but I guess I'll have to say it again. For those that are critiquing my pronunciation of Ladar, maybe you're saying it wrong. Like maybe you need to look in the mirror and say, maybe I'm the problem, right? And if you do that and have some self-reflection, maybe you'll realize, you know, there's other ways to pronounce things, and maybe you're in the wrong here. Anyway, Brad Gerstner, altimeter, he bought Robinhood, 2.8 million shares in Q1, $120 million of Robinhood. This was a good one, yo. This was a good one. Yesterday, this was a really good one. I mean, I respect Brad Gerstner a lot. The BG2 pod, I know a lot of you guys listen to that. He was early Nvidia, early Tesla. He understands the world of technology. Brad Gerstner has been liking my tweets on Robinhood for the past year. He followed me about a month ago, but over the past year in 2024, when Robinhood was really starting to get its momentum from $10 to around $40, he was occasionally liking a few of my tweets every other month when I posted updates about the company. So I always kind of figured he had an eye on the name. It's a tech company. He looks at tech companies, looks at innovative tech companies. Robinhood's growing 50%. It's hard to kind of ignore that. And now he has initiated a 2.8 million share position in Robinhood. So very, very excited to see Brad Gerstner there. Brad Gerstner also liked this tweet yesterday. So he is keeping an eye on this position. Fun fact for all of you guys, Triple V, which you guys know in the chat as the dude who sends super chats. He texted me a screenshot last night when this news broke about Altimeter and Robinhood. And he texted me a screenshot of his Robinhood position. And he said, LOL, I have more hood than Brad Gerstner. So yeah, we do. This is why Triple V sends these casual $500 super chats. Some people just, you know, they've done well for themselves in life. So shout out to Mr. Triple V. So that's what we got on Robinhood. And then we have Grabby Grab. Now, this one was a big one, folks. This one was a big one. Howard Marks of Oak Tree Capital Management, who really didn't do any major moves when it came to his portfolio. He's a very, I would say, boring investor for most of us. Energy, credit, utilities, nothing super crazy, right? He's not taking a big bet on Nvidia or Amazon or anything. He bought 10 million shares of Grab. He bought 10 million shares of Grab. 1.15% of the fund is now in Grabby Grab. And again, the reason this is so important is because Grab is an emerging marketplace and a tech company. Marks would never invest in DoorDash or PayPal or Uber, but he's investing in Grab, which is a combination of all of those. Now, could he have sold his Grab position already? Sure, but I don't think you buy 10 million shares at $4.50, which I think is his average, and then sell at $5 for a 10% gain. Like, you know, this is Howard Marks is not that type of investor. If he's going to make a position in a company, he's going to have a thesis and probably go very long on that name. So maybe he wanted outside US exposure, but he does not invest in tech companies. If you know anything about Howard Marks, he's not a tech guy. He doesn't really care about technology. So at least, that's just not his investing style. So from that perspective, it was really interesting. Grab right here is up about 1.19% of the pre-market, 512. I think maybe the market is starting to see some more potential in this name. And it's kind of just really exciting to see the big guys get more into this name. On top of that, you had Ray Dalio. We already talked about his top 5 buys and sells. Basically, he loaded up on China and gold in Q1, and he sold Meta, Google, AppLovin, Nvidia, the S&P 500. He still owns those names, but those were his top 5 sells for Q1 2025. He loaded up on Grab as well. They bought Grab in Q4 2024 with 1.5 million shares initially. They added to that position by 329%. They added 5.97 million shares. They now have 6.642 million shares in the company. Grab is only 0.14% of Bridgewater Associates. They have 800 positions. It's a small position of the overall fund, but the rate of growth quarter over quarter to me is way more interesting in terms of the acceleration of how much they aggressively added to the position versus the actual weighting of the position in the portfolio. So 6 million shares, not a small amount for Mr. Ray Dalio. And more importantly, again, the rate of growth to me, it's just exciting. It's just really, really exciting to see this play out. Now, that does not mean that Grab's going to go to the moon or anything. That just means that some of the big guys are giving it a little bit more of a vote of confidence by establishing this position. Toyota as well. They didn't sell any of their shares. They have 222 million shares. You did have some funds that sold their shares as well. So obviously that's why the stock has not mooned, because if Ray Dalio is buying shares, someone is selling those shares to him. But you want a quality of investor like a Howard Marks or a Ray Dalio that's saying, hey, I see some value here and I'm going to go long on this name. And given the stock has been consolidating for the past 3 years, as you can see in this chart, I think it's hopefully primed for a breakout. The question is just going to be when, and maybe after they get that acquisition of GoTo done in Q2, we're going to see how that plays out. Okay, then we have Warren Buffett. What did Mr. Buffett do? So Buffett did a couple of things. Number one, he sold a little bit of, what did he sell? He sold a little bit of Bank of America. Okay, so he sold a little bit of Bank of America. That one, he sold 7% of his position. He kept all of his Apple, which I thought was actually really interesting. There is a fun chart that I have to pull up and show you guys a little bit later. But if you take away Apple from Berkshire Hathaway, they underperformed the S&P over the past 10 years. They underperform if you take away Apple. So Greg Abel, I'm sure he's a very competent person, but if they do not include some type of technology stock over the next decade, and I don't think it can be Apple, I think they have to find their next Apple. I don't think they're going to beat the S&P 500. Like, I just don't see a world in which technology doesn't dominate. I mean, it's already 33% of the index of the S&P. So if you took away Apple over the past 10 years, Berkshire Hathaway would not outperform. And Apple kind of establishing Buffett's legacy towards the end of his career by allowing him to meaningfully outperform, but it's because of Apple. So they kept their 300 million shares of Apple. They sold a little bit of Capital One. They sold a little bit of Bank of America. They sold a little bit of T-Mobile. They added to Domino's Pizza. They added to Domino's, and then they added to Constellation Brands, which is a holding company for alcohol like Modelo and Corona. And you guys told me last night on the daily recap video in the comments that they also own a bunch of weed brands, which I didn't know. So apparently Buffett's betting on marijuana, alcohol, and pizza. I don't fully get it, to be honest. I don't think alcohol and pizza are going anywhere. I mean, it makes sense that he's, investing in it, but as like a real portfolio allocation play, those were the only big moves he made in terms of adding. To me, it's more so he's bearish about the broader economy and he doesn't want to make any serious moves that would, require actually allocating capital. So he's kind of going in a safe route where he thinks alcohol and pizza going into the summer are not going to be in low demand. And as a result, he's investing in those. Now, the most important thing from what Mr. Buffett did yesterday was establish a position in a secret stock. So for those that don't know, the SEC allows certain funds the privilege to acquire a name privately in order for their disclosure of the name to not affect the price of it during accumulation. You might be saying, well, wait a second. If you buy a name and you disclose it and the price is affected, that is an efficient market. That is the nature of capitalism. Why should people get special privileges to be able to not disclose that name? I think that's a fair point, but the SEC apparently allows Buffett to do whatever the hell he wants. So from that perspective, Buffett is buying a secret stock. They did disclose that yesterday. It's a special privilege, again, that few funds have access to. And we don't know what that stock is because it is in the accumulation phase. We do know he did this back in 2023 And that secret stock ended up being Chubb Insurance, a pretty boring insurance company, which has done very well from like a stock perspective. It's up 200% over the past 5 years. But the point is, I thought it would be PayPal or Verizon or Disney or something, something a little bit more spicy. And I would love for everyone to put in the chat either their best right answer or the best wrong answer that you think it is. But he is acquiring a new name. I think he also said at the shareholder conference that they've deployed $10 billion into a name that they can't talk about yet. So it's got to be a company that has the ability for a Berkshire to buy $10 billion worth of. I don't think it's Fartcoin. That would be not the worst investment given how Fartcoin's doing, but I don't think it's Fartcoin. A lot of people have said Amazon. I don't think it's crazy to say that it's Amazon, just given I do think they need a tech investment over the next 10 years, but I don't think it's going to be tech. I think it's going to be another insurance company. I think Greg Abel is just going to say, hey, I want to follow in the footsteps of Buffett, and we're going to keep getting some more insurance, get those nice premiums from insurance companies, and that's how we're going to kind of play this out. I would love for it to be Hood. I don't think it's going to be Robinhood. I don't think he's going to bet on a next generation brokerage. It's probably not going to be Tesla, although it would be epic to see it be Tesla. And I think when you talk about something that can carry the fund and beat the S&P over the next 10 years, to me, it's kind of obvious that it should be something like a Tesla, because what else has more potential outside of a Tesla, a Palantir, these names, and Tesla with the robotics and their TAM is just so like, or a Rocket Lab, right? Like you need things that have real big potential and S-curves that are built in or beginning to get built in to the overall thesis. Because valuation at that point is just not going to be as important when you have that level of explosive growth. But, there's not that many companies out there that can show that. Nvidia is one of those companies. I know it's grown a lot, but Nvidia still has a lot of growth. But, Buffett he tends to not invest in those names. So a lot of you are saying UNH. Look, it could be UNH, but he's been acquiring UNH. So if he did, it's not like he's buying the dip from yesterday. He's already bought $10 billion worth of it. UNH right here up 3.1%. It bottomed at 248 yesterday, right here at 283. So if you bought the dip yesterday, you're up $40, which is not too bad. But if he has been buying UNH, he's probably started buying it around 450 to 370, which means, he's definitely holding a bag so far on UNH. I would love for it to be Palantir, but I don't think it's going to be Palantir. Google is not crazy, bro, given this valuation. It's not crazy to say it's Google, but I also just don't think it's going to be a tech company. I think it would be pretty cool for it to be MicroStrategy and for him to bet on Bitcoin, but I don't think it's MicroStrategy either. So that's the main update we got from Berkshire Hathaway. Now, the last update we have is from David Tepper and Dan Loeb, and the summary of what they've done is that they've decreased their China exposure. David Tepper, again, famous for saying to buy everything back in September in 2024. He said, hey, China's cheap, buy literally everything. And if you took that advice, you've done very well. So he repositioned the portfolio to get rid of some of that China stuff. He still has a lot of it, but just, 20, 30% declines across those stakes. And he added to Meta and Google. And then Daniel Loeb, of Third Point, he added to Nvidia, 1.5 million shares. So big buy on Nvidia. And then he de-risked out of Amazon, Microsoft, some of his other China names as well. And then added to some of the other names like Caterpillar and a T-Mobile, right? Some of these kind of traditional value names that were just part of the overall portfolio. So the summary of what happened in Q1, I do actually have the data right here. The summary of what happened in Q1, let's take a look at this right here. The top 10 buys last quarter in Q1, based on the super investors, was Microsoft, Google, Meta, Amazon, Visa, Berkshire Hathaway, Capital One, Apple, and United Health Group. Those were the top 10 owned stocks by super investors as of Q1. The top 10 buys were Microsoft, Meta, Taiwan Semi, Nvidia, Amazon, Google, Wesco International, Texas Instruments, Uber, and Flutter. Flutter, also a name that kept popping up a lot. Flutter in the sports betting and gambling part of the economy. That one was added by some big investors. But basically, you look at this list and it's tech. It's big tech. That's it. I mean, the market is still betting on big tech. There was plenty of sells of big tech as well, but there were also tons of buys. And so from a Wall Street perspective, the top 10 main buys ultimately came down to the semiconductor space and the technology space when it came to the Mag 7. Bill Ackman, he didn't do anything too crazy. He did sell some of his Chipotle, sold some of his Hilton, and he sold some of his Google, very small stake of his Google that he sold. He still has a ton of Google. He converted his Nike shares. He had 16 million shares into Nike call options for 3 years out. So I guess he wanted to be more capital efficient. Obviously, it costs less capital to buy the call options versus buy the equity straight out. So from that perspective, Bill Ackman still being bullish on Nike, but decided, hey, instead of owning the stock, I'd rather just own the call options, which to me is actually kind of more bullish because he's putting an expiration, a deadline on his thesis. But it's also kind of bearish because he tends to not do that with other stocks he wants to generally just be long on. He tends to just buy them. But he's going that route for Nike. And then Uber, of course, he already owns 30 million shares. That was disclosed a couple months ago. So Uber at all-time highs, that one doing very well for him as well. So that's what we got. Big tech is dirt cheap, so it makes sense. I agree. Big tech is still, in my opinion, pretty damn cheap compared to the rest of the market. And so I don't think it's crazy to see a lot of these hedgies, a lot of these money managers that potentially sold during April, potentially sold during the March lows, which weren't as bad as the April lows, but still were, not the best prices to sell out. Only February, if you sold, really did you get the top of the top kind of meta 740 prices. And they might be buying back in. And based on some of the action we're seeing, on Nvidia, 115 to 136.5 in a week, I think there's some big money that's probably re-entering into a lot of these trades. My first buy on Nvidia at the end of January was at 139. So we are almost breaking back to where it was. The all-time highs on Nvidia are 153. So hopefully we have good earnings. Hopefully we have a good earnings, and that really gives us a shot to get back into the 150s on Nvidia. All right, let's talk about Google for a bit. So Sundar did an interview today. This morning it came out. He said a bunch of different things. I have 3 clips that I want to about 2% right now in the pre-markets. Here's the first clip on if Google is being disrupted by AI.
For almost a decade, one of the first things I did was to think of the company as AI first. It was very clear to us. We had Google Brain underway in 2012. We acquired DeepMind in 2014. 2015, when I became the CEO, I said, look, the technology is really evolving. The reason we were excited to approach our work as AI first is because we really felt that AI is what will drive the biggest progress in search. And so, I think even the last couple of years, I viewed this as an extraordinary opportunity for search. I think if you look at how much information means to people, I think each person is going to have access to information in a way they've never had before. So it feels very far from a zero-sum construct to me. And we are seeing it empirically when people are using search. Obviously, there are a couple of major things we have done with search. Transformer TikTok has come in. YouTube has thrived since the moment TikTok has come in, right? And it was a whole new format. We did shorts when we launched shorts. Shorts absolutely didn't monetize anywhere near long form, but we just leaned into the user experience. And over time, and we figured out monetization to follow. So, to me, you don't think about it as a dilemma, because users, you have to innovate to stay ahead, and you kind of lean in that direction.
It's like one of the original principles of Google, follow the user. All else will follow.
Yeah, there you go. So all that, to your question about innovator's dilemma, I think the dilemma only exists if you treat it as a dilemma, right? For me, all along in technology, you have these massive periods of innovation, and you lean into it as hard as you can. It's the only way to do it. When mobile came, everyone was like, well, it's like you're not going to have the real estate, like how will ads work? All that stuff. Mobile was a transition which ended up working great. I can give great examples, right?
All right, here's him talking about competition.
So, look, each of them, they're different people. I'm fortunate to know all of them, and I think maybe only one of them has invited me to a dance, not the others, right? But I spent time with Elon maybe 2 weeks ago when I talked to him, and his ability to will future technologies into existence, I think it's just unparalleled. So look, these are phenomenal people. I respect all of them. There's partnerships involved, there's competition involved. But if I were to step back and say, at the end of the day, I love, driving technology progress in a way that impacts people positively. So look.
And then finally, here's him talking about quantum, saying, hey, quantum's coming.
To me, quantum feels like where AI was around, 2015. So I would say in a 5-year time frame, you would have that moment where a really useful practical computation, is done in a quantum way, far superior to classical computers. And that'll be that aha moment, I think, which will really show the promise of the industry. I'm absolutely confident that we will get there when I see the progress and I can pattern match to progress in the other fundamental areas we have worked on. So it really doesn't feel like, obviously, look, these are very challenging areas. You may hit a constraint. I do think a lot of people are making announcements in quantum. So in some ways, it's tough to distinguish them. We had the same scenario in self-driving maybe 3 years ago. There were so many people doing self-driving. It looked like everyone was roughly the same, but they weren't. I could internally tell the difference, that how far ahead Waymo was.
Sundar needs to keep talking his shit about Waymo, bro. He needs to keep talking his shit about Waymo, because Waymo is crushing it with 250,000 paid rides a week. So that's what we got. Those are the highlights from the Sundar interview. In terms of creating more confidence for investors, I think this interview was more of the same. It's not like there was anything too crazy that he said when in regards to like the AI experience or what is happening with search or what is happening with Google being disrupted. I think at the I/O event, he's going to do a lot more showing versus telling, and we're going to get a lot better of understanding of like why Google should be seen as an AI company. I mean, we all kind of know it, but sometimes the market just needs to be reminded, why they are not just a legacy AOL, Yahoo type of company. And so from that perspective, look, he looked kind of relaxed. He didn't look like he was struggling or trying to prove that Google still matters. Like, he looked pretty relaxed, and he said, look, we're doing what we got to do. We will compete in AI. We know that this market is going to be very competitive, but we also know that we have a moat when it comes to having everyone's data on the planet, and we'll be able to effectively transition them into an AI world. I don't know, dude. I think we wake up in a couple months and Google's at 200, and a lot of the freak out was for the wrong reasons. And if it is, then, this is not the worst time in the world to get excited about Google. The one big thing is they just have these DOJ risks. And I think that is more of a headwind on the stock, even than the search stuff, is that if they have to keep paying all these parking tickets of $5, $6, $7 billion and potentially even getting broken up, then that might be an issue. Now, every equity research report that I've read from the sell side, JPMorgan, Goldman Sachs, et cetera, they're all bullish, like really bullish, like all of them. I read like 5 of them last night. They have $200 and $250 targets on Google. Oppenheimer, JPMorgan, they're just like, dude, search is not dead. Everyone's freaking out for no reason. Google will be fine. And if there is a breakup, it will create more shareholder value because you will get shares of other parts of Google that are broken up. And that's something to potentially look forward to versus necessarily be afraid of. Pounds right here, 129.20 in the pre-markets. And so that's what we got currently right now on Google. And if we break through 170 today, that would be very exciting, because that would be just psychological. We didn't even break through 170 after earnings. So 167 right here, 170 would be really nice to see on Google. All right, let's talk about the Saudis and the Middle East. This has been a historic week for President Trump and the administration. Here's what he got in terms of commitments. 1.4 trillion from the UAE, United Arab Emirates, 600 billion from Saudi Arabia. These are, again, commitments. These have not been invested yet, but these are commitments from these countries to be able to invest over the next 4 years inside the United States. And Qatar is saying we're going to put in 500 billion. Now, will we actually see the 2.5 trillion that Trump is being promised from the Middle East? I don't know, but I do think there's a better chance than not. And the reason for that is because, again, we talked about it for the past couple of days, but these countries in the Middle East do not want to rely on oil money forever. By the way, I was doing some research last night on how they got their oil money. And in 1971, they recognized that they had massive natural gas underneath their land. Not just oil, but natural gas. But the liquefied natural gas cooling technology, or the LNG export technology, SMCI does the cooling stuff, that wasn't developed, right? And it wasn't until 1995 that the fracking technology and the LNG exporting technology actually was developed enough to the point where they could partner with an Exxon or a Chevron. And then they really started drilling to be able to get that natural gas out of the ground. And so realistically, for the past 25 years, 30 years, they've been able to get that oil money to become real. And they become some of the biggest exporters in the world, but they know that's not going to last forever. And as a result, they want to diversify. So I think there is a good shot that this money will come to the United States in the form of data centers, obviously in the form of Nvidia and AMD chips. And as a result, it will fuel massive investments, massive jobs in the United States. And it is a big, big win for Trump. We had Trump live just 20 minutes ago. Here's what he had to say as he was departing from the UAE.
But new ones are coming. New ones are coming. And it's been an incredible 4 days. It's I want to thank your family. Your family is so unbelievable, the job they've done. And your father has been really incredible. The job they've done here is incredible. And we've made it work. And, they were being wooed by others. But there's no more wooing. I think we're in pretty good shape.
Absolutely.
There's no more wooing. I've been friends with these leaders, the 3 leaders in particular that we saw over the last 3, 4 days, 5 days. And they're great people. They're great people, and they love our country, and we love them. So it's been a tremendous time, and now it's time to go back home. My daughter had a baby. I'm going to go back home and see that little baby. And then we get back to a lot of work. We'll see what happens with Russia and Ukraine. I think it's something that's just, we got to stop the killing. 5,000 people a week, 5,000 young people a week on average being killed in a war that is going nowhere. It's a shame. Should have never happened. But we have other things to do also. Plus, we have an Iran situation, which we're going to take care of. One way or the other, we're taking care of. It'll be taken care of 100%. It'll be done nicely or not nicely. And the not nicely is not a good thing for them. And I think we're talking to them, and I think they've come a long way. So I just want to thank the media. Has been very fair, I have to say, and they realize the importance of what we've done here, and it really is, and it's an honor, and it's sort of easy for me because I know the people. I've known them. I've known your father for a lot longer than I've been in politics, because I did have another life. That was a very good life and a very successful life, but this is something that's really successful because we're doing it for 325 million people. And the United States now is the hottest country anywhere in the world. And you see that even with enlistments, military enlistments setting records. 6 months ago, you couldn't get anybody to go into the military, and so many other things. So
now here's what he said yesterday on Air Force One. This is a 20-second clip, and I think a lot of you guys will remember what he's referencing here, which he said yesterday.
Hands that any human being is capable of doing. That was a long deal, and they were big people, but they were starving for love because our country didn't give them love. They gave them a fist bump. Remember the fist bump in Saudi Arabia?
Do you guys remember the fist bump? I forgot about the fist bump. I saw that clip last night, and I was like, oh yeah. When Biden visited Saudi Arabia, there was a lot of controversy around what had been done to Jamal Khashoggi, and the Biden administration was trying to, I think, explicitly characterize Saudi Arabia as a pariah state. And as a result, the question that the media had was, how is Biden going to interact with MBS? And instead of giving him a handshake, he rolled up to him and gave him a fist bump. And this was a heavily politicized fist bump. In fact, the prince in Saudi Arabia, when Biden was coming down from Air Force One, didn't even go to greet him. He sent some representatives, didn't really have any fanfare, right? It wasn't like the most respectful, oh, the president of the United States of America is coming to Saudi Arabia. With Trump, I mean, dude, they lit up the Burj Khalifa last night with the American flag. The entire Middle East was celebrating that he came over to the region. The Prince MBS went to physically shake his hand and welcome him into the region as soon as he landed in Saudi Arabia. So when he says they were starving for love and that they were really appreciative of the United States, I think that means that a lot of money is likely going to be invested into the United States because they don't want to ruin the relationship that they had, or that they just cultivated, or that they kind of cultivated and reaffirmed over the past 5 days. And if they don't invest, Trump's going to be pretty upset. So I'm thinking of it from an investment perspective. If they gave him this much love, this much loyalty, this much respect, completely a 180 that they had in terms of their appreciation or respect for Biden. Sometimes negotiating is just about, hey, does the other person like you? Like, I've been in situations in life where you get a deal done because the other person just likes you. They like talking to you. They want to do business with you. A lot of times business is about, do you like the other person? And from that perspective, I think they like Trump. And as a result, hopefully they will like our American tech companies and continue to invest in them as well. So that's what we got in the context of the Middle East. It's a big week for the Middle East. It's a big week for the United States. I mean, this rebound that we saw in equity markets, Nvidia back to 136, I do not think we see it unless we get the type of momentum and growth that the Saudis have committed to when it came to them saying, yeah, we're ready to buy as many Nvidia chips as possible. We had to have the AI diffusion rule repealed from Trump in order to make this happen. And now the last stop to get Nvidia to $200 this year is China. If we can get a deal with China, we can get some progress with China, and we can get Nvidia selling back into China, even if it's not the Blackwell chip, but rather it's the H20. That's another couple billions of dollars of revenue coming into the United States for Nvidia, which would be very important as well. By the way, Russia and Ukraine have just begun their first direct peace talks in 3 years in Turkey. President Trump is not going to Turkey, but Russia and Ukraine are talking right now. The talks ended about an hour ago, so we're going to get updates in a bit in terms of what happened with those peace talks. But that's another catalyst for the markets. If we can not only get some peace in the Middle East, but also get some peace in regards to Russia and Ukraine, that's just more geopolitical stability, which is going to be calming for the equity markets. Webull right here in the pre-markets, that one is up about 8%. So that one getting some love right now. Archer as well, again, had a big week. It was up 20% after earnings. Now it is up 7.3% in the pre-markets. So that one's moving a little bit. Palantir 129.45. Tessie back to 347. Looks like she wants 350. Again, $1.4 trillion of options are expiring today. So it's something to just remember in regards to the volatility we might experience throughout the day, as we have a lot of options that are getting ready to be expired. And that's what we got. It's been a big week. And then on top of that, Atlanta Fed, they revised their Q2 GDP targets. Folks, they're estimating 2.5% growth. Previously, they estimated 2.3. 2.5 versus 2.3. Coinbase. Yeah, Coinbase is partnering with Webull for more deployment of crypto products. So that's why Webull's probably up right now. Coinbase, again, they had a lot of bad headlines this week, but Coinbase stock right here, they are up about 2.4%. Coinbase back to 250. But the Atlanta Fed, we had a negative GDP growth quarter last quarter in Q1, primarily based on all the imports that we pulled forward in Q4, which caused a lack of imports in Q1. But if we're getting back to normal and the tariff volatility is dying down a bit, we're going to get back to 2.5 to 3% growth, which is what you need for earnings growth to be at closer to 11, 15%, which is also what you need to justify the S&P 500 trading at around 23 times forward earnings, which would get us to that 6,200, 6,500 range. And it looks like those things are heading in the right direction. TSSI, this one also big move yesterday. It's up 45% right here in the pre-markets. This one, I believe, is a data center company. They are a more underknown data center stock. If anyone had this name, if you're following it, you've done very well. They had a monster earnings yesterday in regards to their data center revenue explosions, essentially. I think it was growing like upwards of 150%, 46% right now in the pre-markets, 1296. That one's probably going to get some love. I do think there'll be some people selling to strength because it is under $1 billion market cap. It is a small cap, but $220 million market cap. So it is small, but the broader market is recognizing that these data center plays are not going away and that we do have to be more excited about them. Nebius right here up about 1.56%. VST and VRT, these are the data center plays. They're also up about 3% each respectively based on all this momentum we're seeing in the context of Nvidia. And then Netflix, look at that. Almost $1,200, dude. Like, that's kind of crazy. Netflix has been a crown jewel of this entire market. I don't think anyone expected it would hit all-time highs by May. Netflix year to date is up 32%. It's outperforming every Mag 7. And this one, again, has just been a gem if you've owned it. I don't think there's a reason why Netflix is up. I think it's kind of just pumping with the macro. I didn't see any crazy headlines around Netflix. Oh, they did say that they have 94 million ad tier supported subscribers in like a year and a half of launching ad tier. And by the way, ad tier means they still pay. They pay $7 a month to watch ads. So it's not like ads are completely subsidized for free. So that product growing is just really, really good for Netflix. So Netflix or food if a recession hits? Yeah, that's the question, right? Like Netflix is acting like a stock that will not be canceled if a recession hits. People are just going to keep continuing to own their Netflix as well. So yeah, dude, it's been a hell of a week. It's been a hell of a week. I know a lot of your guys' portfolios went green this week. A lot of people said they hit some milestones in the portfolio. A lot of year-to-date percentages switched green, or I think the average for you guys is closing in on 20 to 30%. It has been quite the week. I think we've got another trade deal coming up on Monday or Tuesday when Trump gets back from the Middle East, and he'll be able to announce a lot more in regards to what's going on. Hopefully that deal is going to be with India. And you're getting a market that's getting more excited about what's going on. We had Tom Lee yesterday at a Bitcoin conference. Here's what he had to say about where Bitcoin could go in the coming years and why investors are paying for something like a MicroStrategy.
I also wanted to ask you, you also have a
strategy and similar are really arguably the two originals to pursue a more deliberate treasury strategy. And as Eric said, they actually are pursuing this as using smart leverage, to borrow money at low cost. And of course, strategy has essentially systematized that. I mean, they've got so many different instruments. And I think it's very smart because over time, when they accumulate a large holding of Bitcoin, that is more valuable than just the holdings times the market price. I think it represents like if someone needed to buy 500,000 Bitcoin or 100,000 Bitcoin, I don't know how big Semler will get with their holdings. It's not the market price times their holdings. It's really what premium do you have to pay to acquire, X percent of the network value of Bitcoin.
So he's bullish the leveraged companies against Bitcoin. Also, he had a personal target on Bitcoin that he revealed yesterday, which is 1.5 million. 1 to 1.5 million a coin on Bitcoin is what Mr. Tom Lee is estimating.
Bitcoin is a little bit like a Swiss Army knife because it really does meet the fact that it's a risk-on asset, but it's a network value asset. And I think that as more people adopt Bitcoin, it still explains most of the increase in price. And of course, it's a great safe haven asset. I mean, I think for the next 10 years, I think the easiest way to think of Bitcoin is that it should have the same network value as gold. And gold, if it's a $23-30 trillion asset, that means Bitcoin should be at least $1.5 million per Bitcoin.
That's not in 1 year. That's over the long term. I would be imagining it's over the next 10, 20 years. But I mean, still, if you own one Bitcoin and it's worth $1 million one day, it wouldn't be that crazy. Now, one of the reasons why I think it's really easy to believe that Bitcoin could be worth $1 billion is because there was some data that we got yesterday, and we'll expand more on it during the show. But it has to do with the amount of debt that the United States has and our deficit. Again, the reason why the 10-year was spiking over the past couple of days is because of the increased debt ceiling and the tax cuts that we're introducing. It's just more liquidity into the system with no real checks and balances on it. And as a result, kind of one of the only solutions is a currency that's not manipulated, which is Bitcoin. And that could be another reason why it's driving up the price. Real quick stat before the market opens. For only the 6th time in history, the S&P 500 has soared at least 18% in just 25 trading days. What happened the previous 5 times? 250 days later, the S&P 500 was green 100% of the time with an average gain of 30%. The low return was only 11%, while the best gain was 43%. This happened back in 74, 82, 91, 2009, and 2020. So there's an average of a 30% gain on the S&P after we go up 25% within 18 days. Maybe that happens this time as well for the S&P 500. All right, folks, there we go. Friday, May 16th, 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. All right, wake your ass up. Let's get into it. Tessie opens up at 346. That's up 1% on Tesla. Nvidia, 135.84. That is also up about 0.76% on Nvidia. Palantir, 129.05. That's up about 0.75%. Robinhood, 61.06. Tom Lee did also add Robinhood to the Granny Shots ETF, along with Brad Gerstner adding it in the Altimeter Capital Management Fund. So you got Robinhood right here up about 0.5%. Amazon is slightly green, 205.15. Meta, 633. Meta is actually down 1.5%. Meta is delaying the flagship AI model from coming out. That was reported yesterday. They were down 2%. They're down another 2% here right now. I think it's kind of a nothing burger, but it is down based on the news of that delay for the model. PayPal is slightly down. SoFi, 1367. That is still green. Google, 167.51. Google is green on the day. Grab, 518. That's up about 2.3%. MicroStrategy, 401. That's green. Microsoft, 450. That is flat. AMD, 117. That's up 2.4%. Coinbase, 252. New partner with Webull. That is green. Webull stock itself, that is also 1284. That's green, up about 5%. Eli Lilly is up 1.3%. The VIX is down 1.5. S&P 590. kind of struggling to hold 590. You got a red candle from the pre-markets, but it's holding slightly that level at around 590.5. Uber 90.11, Lyft 16.43. That's up 1.2%. CoreWeave 69.62. Great earnings they had. That's up 6%. Cisco also, they had a great earnings this week. 63.55 right there. Walmart 96.57. That's basically flat. Tesla 347. Nvidia 135.78. Trying to get to 136. And then you got Palantir right here at 129.44. Did Trump just tweet right now? What did he say? What the heck did Trump just say? Trump said, has anyone noticed since I said I hate Taylor Swift, she's no longer hot? Okay. I'm just happy that he didn't say anything that would get the market to crash. But yeah, has anyone noticed since I said I hate Taylor Swift, she's no longer hot? Okay. 10 minutes ago, Trump tweeted that. I don't know why, but it's not about the markets, which is a good thing. Palantir 129.22. Nvidia 3 cents away from 136. Are we going for 136? Are we going for 136 on Nvidia? The content in chief. That is correct, dude. If anyone knows freaking content, it's Mr. DJT. My goodness, dude. I don't know what prompted him to tweet that, but he tweeted that. Nvidia got rejected at 135.97. 136 resistance on Nvidia is 10,000 shares. Did we hit 136? I feel like we hit it. Yeah, we hit it. We hit 136.30. Okay, so we did hit it, but we got rejected right there. So that's why there's no wall. I think we should get back there pretty easily. 135.90. So we did hit it. It was for a little bit. Tesla 347, trying to break above 348, get back to that 350 level. SoFi right here, 13.59, and then Palantir 129.05, kind of chilling in that area. Are we at 170 on the Googs? Are we there? It's close. 169.08. 169.08 on Google. Let's see. Let me check resistance on Google as well and see if we can potentially get 170 there. S&P relatively flat, not really moving. 170 on the Googs would be 49,000 shares. 49,000, which is not bad. It's actually very possible. 49,000. Amit, what do you think about selling Palantir calls to protect for any downside? I did that. I sold 140 calls for next Friday. So I don't think it's the worst idea. There's still a really good premium. I think around that, 140, 145 range is not the worst price to sell some covered calls at. So yeah, I did that for Palantir for next Friday. Nvidia 136. All right, there she goes, breaking through. So let's check 137 resistance. That's probably more important right here. Google back at 168.75. Nvidia 137. That would be the first time since February if we see that number. 137, which would also, that would be pretty big based on where we were on Monday. 134,000 shares. 134,000 shares for 137. Archer is up 7%. Archer's green. Dell is up 0.78%. CleanSpark and the Bitcoin miners, they are flat, or actually CleanSpark's up 2.4%. I think MicroStrategy is doing another at the money, and at the money is where they sell stock to get money to buy Bitcoin, because Bitcoin's doing well, but MicroStrategy is like not doing well compared to Bitcoin in terms of where it was on Monday. So I think MicroStrategy is probably doing some more dilution right here to raise more funds to buy Bitcoin. But if you're a shareholder, that's kind of the name of the game. That's just what you're signing up for MicroStrategy. The Q's right here at 519. CoreWeave 70.32. That's up 7%. CoreWeave getting some love. CoreWeave really getting some love after those earnings. HIMS is up 2.3%. This was down about 11% yesterday. Had a bit of a recovery towards the end of the day, trying to make its way back to 60. But that is up about 2%. And then Robinhood 61.19. I did buy the dip on Robinhood yesterday. I bought 25 shares of Hood at 59.32. Wow, Tessie 351. Oh boy, dude, 3 days ago, Tesla could barely break above 350. We touched it for like a millisecond. Now it just busted through 350. 351. Let me check resistance at 352. TSLL probably doing very well on the day. 352 resistance on Tesla is 167,000 shares, which is not too bad. Wow. Face ripping on a Friday, huh? Look at that. Tessie up 2.3. It tried to do it yesterday, but got hit, and then it fell back down to 338. And, Palantir, not too far away from the 130s again. That's about 20 cents away. Nvidia just below 136. Robinhood 61.15. Amazon 205. Let me check some of the stocks that the big money guys invested in yesterday. So Uber, that is up a little bit. That's Bill Ackman. Nike, Bill Ackman converted his stock into options. That's basically flat, 62.34. What about Constellation Brands, that's what Buffett invested in more yesterday. That's up about 1%. Domino's, Buffett invested in more yesterday. That's flat, 0.11%. And then Estee Lauder from, what's his name, Burry, that's also basically flat, up 0.37%. Everything else kind of staying the same. Tesla right here, 351.01 currently right now. TSSI, again, data center play, that's up 50%. So congrats to anyone who's in this one. Doing very, very well. Again, monster earnings. And just kind of proving that this whole data center AI thing is not going away. If the small caps like a TSSI, less than a $500 million market cap, can benefit from the momentum of this overall data center wave. Pouncer right here, 129.32. Robin at 61.13. TFC, that's at 40.94. The financials today, JPMorgan is 266. We know that Foot Locker was acquired by Dick's. So that one is up 80% as of yesterday. Enphase right here at 50.10. Google 167, trying to get to 130, and then Grab. Oaktree Capital Management and Ray Dalio increasing their share or their stake in the company. Grab right here up about 1.28% on the day. Pouncer 129.30. Nvidia 135.60. Currently right now. SMCI getting some love today. That one's up 5%. Monster week for SMCI. It was up 16% on Thursday. And now up another 5% currently right now. APLD. So Nvidia put out their thing, their 13F, and they made no changes to WeRide. APLD up 11% right here. What was the other one? There was Nebius. Like they pretty much kept the same 13F. So that one, they didn't buy or sell anything. They didn't make any. I think they had added a little bit more to a couple of them, but APLD right here up 10%. Nvidia still has a big stake in them. And then CoreWeave, Nvidia has a 7% stake in as well, which is, something that the market might be liking right here, up 8.7% on CoreWeave. Rocket Lab gapped up yesterday very nicely, dude. Rocket Lab 25.11, down a little bit. Some of those gains going away, but Rocket Lab right here 25.13, not bad at all on this stock right here. Again, SMCI getting up 5%. Netflix hitting all-time highs today. Are we at 1,200? We are very close to 1,200 on Netflix. Uber right here basically at all-time highs. SoFi 13.67, Nvidia 135. But a bunch of these names getting some love. Tesla struggling to hold 350, so you definitely have some sell pressure going into that 350 range. Pinterest 32.35. Oh, someone bought 1 million shares of Pinterest. I think it was David Tepper. I might be wrong, but it was some hedge fund yesterday that bought 1 million shares of this one. So Pinterest getting a little bit of love right here, and then Amazon 205 currently right now. Archer right here up 9% on the day. AMAT had earnings. Yeah. So the companies that had earnings didn't really move like crazy. AMAT is down about 5.9%. I think they missed on revenue and their guidance was a little bit low. Take-Two Interactive, they are up, or they're down 0.4%. Their earnings were relatively flat. Same story about them. Grand Theft Auto is delayed. So until that happens, the market's not really going to care. And then Kava had a decent earnings, but it wasn't like phenomenal. They're down about 2.2%. They are growing 28% year over year, which is not bad for Kava. Kohler got demolished. They didn't have the best earnings. That stock right here down about 10.14% currently right now. Hims is moving. That's up 3%. Looks like she's squeezing again. 60.85 on Hims. So that one's moving. Bitcoin right here. Are we moving here? Bitcoin 103.9. Bitcoin trying to get back to 104, which would be really nice to see on Bitcoin. You got QBTS, the quantum names catching a bid. QBTS, I think, is up like 40% this week. That's up another 5% right now. So that one doing very well. And then JetBlue, Carl Icahn bought another, or he added 89% to his position in JetBlue. This one is also 20% short. This stock right here up 1.49% currently right now. All right, not bad, dude. It's been a good week. It's been a decent set of headlines that has been affecting the broader market. Again, we got some high flyers with Palantir, Nvidia, and Hood. Tessie right here trying to go for 350, and then Hims broke out this week pretty aggressively. ASTS also had earnings. They are moving a little bit right here, up 6%. That's not bad. Kind of a delayed reaction to their earnings. I think the entire market benefiting off of a pretty good week. Now, we do have a lot of options that are expiring this day in the next 8 hours, 1.4 trillion of that. So that's something that we have to watch out for in terms of volatility. But overall, not too bad to see the screen. Where's Shopify? Shopify got into the NASDAQ this week. Shopify right here up another 1.7%. QUBT, they also had a good earnings. That's up 20%. So more and more of the quantum names getting momentum and getting love from the broader market. And you're seeing that with QUBT up about 20%. SMCI, again, that one's moving right here still. SMCI, 6.78%. Let me see if we have any headlines. I think we have some Iran stuff that's breaking right now as well. Trump was talking about Iran this morning. He said, Iran said, oh, here's the headline. Iran looking to negotiate with the U.S. on trade. Iran looking to negotiate with the U.S. on trade. Okay, so that's positive. That's a good, we get an Iran deal. We get Ukraine, Russia situated. That's not going to be the worst thing in the world. So that's not bad for the markets. Apple right here. Apple is up a little bit right now. SMCI is up about 6%. Apple 211. That's basically flat. Apple headline. Apple could ramp iPhone assembly in India up to 65% by the fall. Apple could ramp iPhone assembly in India by up to 65% in the fall. The market loves that. Trump's probably not going to love that, but regardless, that's not the worst thing. Oklo is at 39.27. That's up 5%. Oklo is up 5% currently right now. All right, dude, it's green. I mean, it's a green market. It's at least for today, and it's not like crazy blistering green like it was on Friday, which was pretty insane given all those tech executives went to Saudi Arabia, and I didn't know they were all in Saudi Arabia, but we are holding a lot of the gains that we had over the past couple of weeks. Meta right here, 636. That's down about 1%. Pinterest again, up about 0.37. Robinhood, 60.96. And then HIMS breaking out again. HIMS right here, 60.72. That's up 3.6% currently right now. Where's UNH? That one was the loser of the week. UNH at 277. That one giving up that 285 pre-market gain that it had. So UNH was at 248, gapped up to 285, now down to 277. S&P 500 is red. I mean, look, down 0.02%. I'll take that. 590 on the S&P. Very close to all-time high. So to me, if we can even close anywhere near this range on a Friday, I would be pretty happy with that as well. Roblox, that one getting some love. Roblox right here, 81.88. That's up also 1.13%. MicroStrategy, it looks like Saylor's definitely selling some stock for Bitcoin. This one should not be tanking the way that it is from 420 to 390, and Bitcoin's still basically at 105. But it seems like he's raising some cash. But he will buy some Bitcoin with that cash, which is what matters. Nvidia 135.37, Tessie 347, and then Robinhood 61.25. Currently right now on Hood. Let's look at all of the other semi plays. How are the semis doing? Where are the semis? So you got AMD, that's up about 1.14%. You got Micron, that's up about 1.2%. ASML, 748, that's up 1.27, or that's down 1.27. SMCI is up 7%. SMCI really getting some love now. ARM is up a little bit. Marvell's up a little bit. And then Dell right here, that's up about 0.86%. So the semis kind of following the lead from Nvidia. I think if Nvidia didn't pump this week, the semis wouldn't have pumped either. But the data center plays are starting to get some of that love. Even the data center energy plays, GE Veranova, that's up a little bit. SCG's up, VRT's up, and then VST is also up 3% right now. Mag 7s are all green except Amazon, Apple, Meta, and Microsoft, all of them slightly down on the day. HIMS is overtaking Hood. That is correct. HIMS basically giving us a V shape from yesterday. I mean, fell to 55, now back to 61.69, up 5%. This one's just got a lot of mojo in it. It's got a lot of mojo. It's got a high short float, and the shorts are going to keep trying, but this one continues to find a way to rip higher. SMLR nuclear play right here. Or sorry, this is the Bitcoin play. This one's up 10% currently right now. SMR nuclear play, that is up 4% with Oklo up 5% right now as well. Oh, where's Boeing? Yeah, they got $200 billion from the Qataris yesterday. Boeing is down. Okay, so Boeing pumped yesterday to like 208 for a little bit. Now it's down 1.4. So we had a little bit of momentum there. Again, Boeing doesn't tend to move that aggressively, given it pays a dividend and kind of just chills out. But it was at 140 not too long ago. And so this one has had a nice recovery, even with the defensive play that we saw right now. By the way, Novo Nordisk's CEO is stepping down. Where is that stock today? I'm just seeing that news right there. That one's down 3.5%. They did partner with Hims last week. Their CEO officially is stepping down. Palantir back to 130. Are we there? Are we there? Yeah, we touched it. 130.32. Wow, there she goes. Palantir 130. Not bad. Talk about Palantir this week, dude. Like completely just defied expectations. 125 or 121 during the week. It was at 107 last week after earnings. Back up to 130 above the earnings pump. I mean, it got to 133 2 days ago. It's nice to see. It's definitely nice to see on Palantir. Nate says, I'm currently traveling for work, but Hims, we had to have Nate be in the chat to make sure he commemorates a little bit of a 4% pump on Hims, but there you go. Never mind, 4%, 5.7% on Hims, 61.99 right here, about to break 62. You got Hoodie trying to follow up 61.65 as well, but both of those names doing very well. And then Nvidia right here, 135.60 currently right now. Mid trademark the saying, there she goes. I don't know why I think of every stock as a she, but like for some reason it's a she to me. I don't know why, but it is what it is. Webull right here at 6.3%, 6.3%, and then Coinbase 5% with the Webull partnership. So Coinbase getting some green as well. Dude, it's a nice day. Even if the broader indices aren't super green, we do have a nice day. We are gonna have Adam join at around 11 as well. So he's going to be joining. Adam, you guys know him, Adam Bergman, Palantir OG. He has his own YouTube channel around option selling. So he'll be joining around 11 to talk his strategies and his ideas around option selling. He retired last year in 2024. So now he just does this for 11 and we'll get his thoughts. But overall broader markets, not too bad. Again, I think covered calls, they're still not bad in this environment. We don't have super rocket ships where the covered calls go underwater. But even if they do, you're making some decent profits. You can manage and roll those positions. So it's not the worst thing. Also, cash secured puts are printing in this environment because if stocks are staying elevated, less likely to get assigned on some of these names. Meta right here, 635. That's down about 1.2%. Do we have any economic data today? Yes, we had housing starts. That was the big data that we have. Let me pull that up. Kind of wasn't that big of a deal. It's in the same trend as we've had for a while. So April housing starts rise 1.6% month over month versus 2.9% expected. April housing starts at 1.36 million versus 1.365. So again, very minuscule miss. April building permits fell 4.7% versus negative 1.2%. And building permits at 1.412 million versus 1.5 million. Basically, the way to interpret this data is the housing market is not really booming and there's not a lot of stimulus and there's not a lot of houses being started, which is not going to be able to get the average price of a house to be down, which is up 30% from 2021 until we get rate cuts. So a lot of this ultimately depends on the Fed, and more the market is going to be looking towards JPOW to decide when we get that cut. Now the June cut still only an 8% probability for the June cut, only an 8% probability. So it's going to take some time to get that probability up there. But as of now, it is still only 8%. And hopefully that increases. Nvidia right here, 135.70. Palantir just below 130. And then PayPal, 71.60. What moves are you guys making, buying and selling? Whether it's calls, puts, or just straight stock. Let me know in the chat what people are doing here. I think it's safe to say, at least to end out the week, for anyone who answered yes on my polls throughout the week on do you trust this green? We'll see how this day ends out. But so far, this green has been holding up pretty nicely. You have a lot of S&P 500 targets across the board that are being raised now. And the reason they're being raised is because a lot of these analysts, can't keep a $5,200 price target when you've got the markets doing what they're doing right now. So obviously, we have a long time until the end of Q2. But we are seeing some, even Josh Brown, who's someone I respect as well. He was on CNBC yesterday. I mean, he got really bearish in April and kind of started shifting away from equities and, just started saying, hey, this trade deal stuff is going to create a lot of issues. Even he's recognizing, you know what? although I was really bearish, he was just like, it's hard to be bearish when you have this much momentum and you have these many trade deals that are stopping the market from thinking that there's going to be this much volatility. So he's back to being a bit more bullish on this market, as are a lot of people. And unless we get whipsawed by some random news that we're not expecting, maybe we are safe to be a bit more green. Okay, let me see what you guys are saying in the chat. We got some people saying we're buying color, Google calls, buying more hymns, grabbing some grab. I don't hate that. Reddit, dude, great week on Reddit. Absolutely incredible move right here. 114.89. It's down right now, but it was at 120 yesterday. So Reddit, not too bad. Celsius as well, currently trying to break through $40, which would be big psychologically for Celsius. You got some people saying I'm cashing out, taking some profits. Short float on Rocket Lab, that's a good question. I think it's like 11%. The short float on Rocket Lab is 15%. Wow. 15.8%. So half of Hims' float from a short percentage is Rocket Lab. And yeah, that one is definitely one that could squeeze if there's momentum. Look at that, 25.40. She's moving up about 0.7% currently right now. Where is Hims? Hims is at 62.26. That's up 7%. Robin at 61.27, and then Tessie right here, 3.47 on the day, currently right now. Shout out to Mr. Triple V for the $100 super chat. He is loving the fact that you guys don't know who he is, and you guys guess every day in the chat. It's like absolutely hilarious to him. But thank you, Mr. Triple V, for being here. All right, so I'm gonna give you guys a little bit of inside game on what Triple V did yesterday. So this is what he told me. I told you guys he's big into selling options, and he's, printing a decent chunk of money on selling options. So what did he do? He said he bought 200,000 shares of UNH at $260 yesterday, which is about, 52 million of UNH. And then he sold the $285 covered call expiring today, May 16th, on UNH. UNH right here at 276. It would have to go up a decent chunk to get to 285. Maybe it does by the end of the day, but as of now, it's stuck at kind of 276. It was at 285 in the pre-markets, or 283. Now it's down to 277. And he got paid $2 each. So he sold 200,000 divided by 100, right? Because you have to divide by 100 shares. He sold 2,000 contracts and got paid $200 per contract, which means he made $400,000. In option premium, if we take 400,000 divided by 52 million, the percentage return on that 52 million was 0.76% in about 24 hours. So not a bad move, dude. Not a bad move. And if United Health stays down below 285, if it goes to 285, then he makes $25 a share. So 25 times 200,000 is 5 million. So he would make 5 million plus the 400,000 if he didn't roll the contract, and if he just let those contracts get sold. And if he, keeps United Health above his average at 260, which again, if you got the bottom, that's really the sweet spot for covered calls, because if you have such a high margin of safety, if you keep the stock in a range between your strike and your average, you can just rinse and repeat every single week, given the volatility in the name, and kind of use the stock as something you can rent out to whoever wants to buy the calls, and then be able to just print on the option premium. And if the stock gets away from you, you lose the direction of the shares, but you make a profit because the shares go up. And if your average is so low, you still make a profit on the stock. So yeah, not a bad move. Not a bad move at all for Mr. Triple V. Again, he's getting big into option selling. He wasn't really that into it, but over the past couple months, he's been getting into it a lot more, and just on a big scale. And so for all of us, obviously, not everyone can buy 200,000 shares of UNH, but if you could even buy, 100 shares of it, there's and use $2,000. There's ways to generate income from your portfolio via option selling, which is, to me, again, I like it. And I keep talking about it so much because it's realistic. Anyone can do it. You don't have to be some fancy day trader that knows exactly how to read high frequency trading algorithms on the chart. Like, you can buy a stock and sell a contract against the stock, or sell a contract to potentially buy the stock with a put. And you could be, the most average investor and still be able to, generate income from it. So From that perspective, I don't think it's the worst strategy in the world. Google right here, 167.38. That's up 2%. Nvidia, 135. That's up about 0.5%. SoFi, 1374, up 1.8. CoreWeave is up 14%. I think we should listen to the CoreWeave CEO, dude. The CoreWeave CEO, I heard him last night on CNBC, and I think the guy did a really good job at explaining the business model and why the market is kind of excited for what they're doing. So let's pull up to this right here and just see what he has to say. I'm not saying the stock is a buy. I really haven't gone through the financials, but there is a reason the market's getting so excited about the overall data center space.
Effective quarter for the company as we've kind of built and driven our technology into the market.
Now, some of that is because of your expertise, and we're going to go into that because it's sui generis. No one has that. You're much more sophisticated. But I'm using the word staggering when it comes to demand, accelerating and staggering.
Yeah, there's a whole lot of superlatives that you can throw at the demand that the entire space is seeing to deliver this type of highly performant infrastructure, and the quality of the environment that we build, the software stack, as you said, that enables such incredible performance on our infrastructure, just really allowed us to have an incredibly effective quarter building the business.
I know everybody wants to.
And then this is what he said about the actual like debt and how they're managing that debt. So this part I think was the most interesting right here on how they're managing their debt. Their balance sheet, obviously they do have a lot of debt because they spend a lot on CapEx, but this is kind of how they're navigating it.
Those who are at least uncertain as to exactly how the business model works.
So like ultimately, you can't take one side of the ledger without contemplating the other side of the ledger, right? So yes, we are going to invest $19 billion. We are going to invest $21 to $23 billion. On the other hand, we have executed contracts for in excess of $29 billion that is offsetting that. And so you can see within the contract terms, you have the ability to build, to run, and to be in a position to repay all of the debt with a significant amount of excess revenue that shows up as profit, in addition to the fact that you own the infrastructure at the end of the term, which will have residual value.
Right. And you're confident that financing will always be there for you, that asset-backed financing, that market that you're relying on.
Yeah. So look, I mean, it's once again, it's success-based. It's a success-based business.
Basically saying if we don't have any success with our contracts, we're not going to make any money, which means we're not going to get to borrow any money. And as a result, that's why they're able to print the way that they're printing when it comes to being able to borrow money and then lend it out ultimately to make more money off that money in the GPU reselling space. HIMS right here, 62.42. That's up about 6.5%. That one is moving. SMCI, that's up 7%, 46.75. And then where's Google? Google, 167. Google's really got to break above 168 to have some real momentum to potentially get to 170. But Google right here at 167.83 currently right now. Amit, what's the risk with selling puts? So remember, when you're selling a put, if you're bullish on Robinhood, for example, at 61, but you don't want to buy Robinhood at 61, you could sell a put for 55 and say, hey, if Robinhood goes to $55 a share, I'm contractually obligated to buy 100 shares worth of it, or $5,500 worth of Robinhood. I might get paid $100 a premium. So I'm getting paid $100 to sit on this 5,500. I'm going to give that to my brokerage. And if by expiration, let's say by May 23rd, Robinhood is at 55, you are contractually obligated to buy those 100 shares. So the risk here is that if you actually don't want Robinhood stock at $55, the major risk to selling a put is that you're selling a put on a stock you don't want to own. If you sell a put on a stock, you should be comfortable owning the stock at the price if the stock is to decline. Now, let's say Robinhood goes to $40 and then you bought it at 55. Well, your $55 shares are now worth $40, right? So you're losing $15 a share. That's just the nature of the markets. If a stock falls after you purchase it, you end up bag holding the shares. The only difference here is that you don't know if Robinhood is going to $40. You don't know if it's going to $70, right? Like it's kind of hard to figure out, oh, Robinhood is going to 40. I'll wait till it goes to 40. What if it never goes to 40? What if it goes to 54 and then you bought your shares at 55 and then it comes back to 60? So realistically, I think option selling when it comes to puts is trying to generate income off of feeling safe when you get assigned on a share at a certain price. The way that people mess it up is they sell puts on really stupid things. And as a result, they end up pulling the bag. For example, BitX, I don't think it's like a stupid strategy to play the volatility on BitX. But if Bitcoin falls dramatically and you're selling puts on a levered 2x Bitcoin ETF or something like a MicroStrategy, you're holding a really big bag, right? And if you don't actually want to own this, you're doing it just for the premiums, you're using it just as kind of a trading instrument, that's when it can become more risky. So you can mitigate a lot of the risk by just selling puts on names that you actually want to own at prices that you're comfortable to own them at. Where's the S&P? We are green. We are slightly green, not really breaking out, but 0.05%. Nvidia stuck at 135, Palantir around that 130 or 128 range. MicroStrategy 392. I think Saylor is definitely selling some stock to the public to buy Bitcoin. Grab right here at 515. Coinbase 257. That's up 5.4. HIM's kind of the big mover, 62.73, up about 7% on the day. And then CoreWeave, masterful day, 15% on CoreWeave, getting some love. We got consumer sentiment data. I forgot we do have Michigan data. Let's take a look at that. Let's see if that Michigan data is good or bad. Again, this is more soft data versus hard data, and it kind of depends on who they surveyed to get the data. But we do have that. Let me pull it up right here. All right, here we go. Here is the consumer sentiment
data. They went from cell phone based to web based, and many believe that these changes ought to be noted. So the number 50.8, well below expectations of 53 and change, and all of the numbers are sequentially lower. Our last look at 52.2 comes in at 50.8, 50.8. And that would be the second lowest reading going back to 1952. So that comps to 50.0, which was June of 22. I have a database that goes all the way back to 52 on this headline number. There's nothing smaller than 50.50, which was June of 22, just to give you a feel for it. Current conditions, 57.6, well below the 60-ish we were expecting, and 57.6 would be the weakest going back to June of 22. Same thing. Now, if we look at the expectations, this is really, really wild here. 46.5, expecting a number that was 48.5 in the rearview mirror, 47.3. Like I said, we're sequentially lower across the board. 46.5 comps to March of 1980, when it was a whisker above 44. Now, the real wild numbers, 7.3% on 1 year inflation, 7.3%. That equals Nova of 81. To find a higher number, you're in April of 81. And 5 to 10 year inflation, 4.6.
People think we're going to have 7% inflation in a year. Who the hell did they survey? Who the hell did they survey that said we're going to have 7% inflation in the next year? I'm just really curious who they talked to.
4.6. Now, to find a higher number, do you go back to Jan of 91? It equals 4.6. 4.7 would be September of 1990. And as I said, draw your own conclusions, whether some of these surveys have changed based on how they're conducted, or University of Michigan just really is more aggressive in some of their survey samples. These are really extravagantly wild numbers. Sarah, back to you.
I just want to add a little more color. Thank you, Rick. So the survey was done between April 22nd and May 13th. So this was full-on reaction. Remember when the markets were very volatile, reacting to Liberation Day. And University of Michigan does note that the next update, which they have on May 12th, the final release, which the May 12th pause on China and on some of the tariffs, that will be in that data. It's not in this data. So that potentially helps explain why there's such a dip in consumer sentiment here and such an increase in inflation expectations. Carl, I'll just also mention, this is always very politically tinged. The Republicans have had more of an upbeat outlook than Democrats. But in this report, they do note a 7% decline among Republicans in sentiment, and 60% of consumers mentioned tariffs as a reason for lower sentiment.
Right. We're really in a period now where it's about the sample date, whether it's UMich or Philly or Empire, all these sentiment gauges, they collect data over different weeks. And that was all through the month of April. So not sure how much the market takes.
Dude, this thing is nonsense. This is absolutely, this is stupid. This is just stupid. No, I even in the midst of all that tariff volatility, 7% inflation, we had 10% for the first time in June of 2022 after we printed $10 trillion. Everyone thought, or whoever they surveyed thought, oh, it would be 7% in a year when right now it's at 2%. I wonder how many of those people even know what CPI stands for. Like, I really wonder how many of those people know what the headline CPI rate is, or that there's a core CPI in addition to a headline CPI. Because if you don't know that, I don't think you're qualified to answer a question about where you think inflation is going to be, because you have zero understanding of like where the current inflation is, or what the gauge of understanding what a consumer price index even looks like. How many of those people even know what a PPI is? Like, you have to ask some people that are relatively educated about the nature of inflation. And if you just ask everyone on what they think, then anyone can say anything. And then what's the point of the survey? Like, that one is just ridiculous, dude. And even if you thought Trump's tariffs were going to be aggressive, to assume inflation would go to 7%, even with, tariffs that are now not going to be there anymore because those tariffs are getting walked back pretty aggressively, that's just it's a bit insane, dude. So I think Michigan consumer surveys are becoming a joke. Like, even if you asked me in the most emotional of times on April 8th, if you said, hey, Amit, if someone called me up and said, hey, Amit, what do you think inflation is going to be like in a year after I heard the reciprocal tariffs? I think maybe I would have said 3.5% max, maybe 4% really to push it, because even that would be aggressive to get up another 1 or 2% on inflation. To say a tripling of inflation from the current rate, you just have to have no idea about how inflation is calculated. And speaking of inflation, the average tariff rate in America now is 14%. So it was 24% back in April. It's now down to 14%. That's still up a lot from where it was in 2024, but we are seeing the tariff rates come down, and hopefully with more trade deals that continues to come down. And if that does, that will only decrease expectations on tariff inflation, which will be good for rate cuts. But we need to get that 14% hopefully to go a little bit lower as well. So yeah, from Michigan consumer survey perspectives, I would not take that seriously, dude. I really would not take that seriously. There is still a 30% tariff. Come on, be honest. Yeah, there's a 30% tariff on China, but that's not going to result in 7% inflation. Like, 7% inflation is insanity. Like, you don't just triple inflation like that. There'll be a little bit more inflation, but also you might have demand destruction with people not shopping as much. So that'll be kind of deflation that is offsetting. Also, again, we don't talk about it enough because it's not always in the hard data yet, because it's going to take a couple years to play out. AI is very deflationary, like very deflationary. The amount of productivity you get from AI, the amount of, like, for example, not having to hire graphic designers because Grok gets so good that it can just design your logo. There is a lot of deflation coming from AI as well over the coming years. And that is a headwind on inflation that a lot of people don't think about. Definitely the Fed doesn't look at that, but that's something that definitely matters as well. Cactus Jack says, Nvidia says it's not sending GPU designs to China after reports of a new Shanghai operation. This is what I thought. So people that said that Nvidia China's Shanghai news was bullish this morning, it's bullish, but it doesn't mean Nvidia is going to be shipping any chips to China anytime soon until the export controls are lifted. So I still think we have a few more rounds of negotiating with China to get Nvidia to sell back into the region, but still nice to see Nvidia engaging with China as well. Archer, big day for Archer. That stock is up, wow, 14%. It's up 34% for the week, folks. So Archer, if you're in this one, you've had a lot of fun this week after those earnings. I don't really know why it's running, to be honest. I think a lot of it is just momentum and hype, which is fine. But their earnings themselves did not necessarily say anything too crazy. I think on Jimmy Fallon last night, he talked about those eVTOLs, the Midnight eVTOL, getting into production pretty soon and getting out into the world. And so that's probably getting people to be excited about it as well. But in terms of actual earnings, I don't think there's any main catalyst. And then HIMS right here, 6180, that's up 5.5%. It was at 63 on the day. Again, CoreWeave is the big winner right here at a 15% gain. 18% gain, never mind, on CoreWeave. It's for the Paralympics in 2028 LA. That's what they talked about. Okay, so that means by 2028, they're going to have more eVTOLs for the Olympics in Los Angeles. I didn't know that. That's an interesting use case. Dude, there's a lot of use cases for their eVTOLs. There's a lot. There's just like New Jersey to New York, LA to San Francisco. There's so much demand for high-class business travel within a very short period of time for people that can really afford those higher rates because, time is money to them. And so definitely a big argument for the overall thesis, just the question of Archer being able to execute and deliver against their backlog as well. Yakam, thank you for the $10 super chat. Hey, man, thank you for all you do. I'm a simple mailman learning about investing. I have the blessing of finding your show. Thanks for sharing your knowledge. Yakam, thanks for being here. You know, it's funny you say you're a mailman. I met a guy at the Palo Alto meetup in February who also was a mailman at FedEx, and he pulled up his portfolio. He was sitting on $3 million because he invested in Palantir very early. And so he is getting close to retirement with a nice nest egg from his stock investment. So anyone can do it. Anyone can do it. It is one of the, you know what, just one of the most life-changing things in the world to be able to understand the equity markets. To think of stocks as your favorite sports teams and to get obsessed with them and obsessed with their earnings multiples and their headlines and their CEOs and just learn more about them. And, you know, that obsession leads to potentially allocating capital in the right place and changing your life. So it's changed my life. It has changed millions of people's lives before. It will change people's lives in the future. And I'm happy all of us as a community can change our lives with the equity markets. Nvidia right here, 135.45. That is green just a little bit currently right now. Trump posted. Did he post something? Last post was on Taylor Swift. Is there a new post? All right, here we go. We got a new post by Trump. Here we go. Republicans must unite behind the one big, beautiful bill. Not only does it cut taxes for all Americans, but it will kick millions of illegal aliens off of Medicaid to protect it for those who are in real need. Okay, that's going to be controversial because a lot of people have been saying that the Medicaid cuts are how they're funding the tax cuts, which politically, you know, if you're giving rich people a tax cut and taking poor people off Medicaid, that's not going to probably look the best to a lot of people. But he's saying millions of illegal people will be kicked off of Medicaid. He then says the country will suffer greatly without this legislation, without taxes going up, or with their taxes going up 65%. It will be blamed on the Democrats, but that doesn't help our voters. We don't need grandstanders in the Republican Party. Stop talking and get it done. It is time to fix the mess that the Biden and the Democrats gave us. Thank you for your attention to this matter. Okay. So Trump trying to get some Republican opposition that might be saying, hey, this is not the best version of the bill to pass, and essentially trying to put some pressure on them to pass this bill. I need to find out what Republicans are going against him on this one, because I think the majority of Republicans he has on his side, there's definitely, I think, 4 to 5 that are not the most excited about this bill. But he's going to need pretty much every vote in Congress because it's going to be hard to get a reconciliation back. So he's not going to get 2/3 of Congress. They're going to do this through reconciliation, which is basically a way that allows you to adjust the I don't want to say accounting, but kind of the accounting of the federal budget. And this is what Biden did to get the Inflation Reduction Act passed, which actually increased the inflation quite a bit. But you had Kamala Harris, the VP, who's the deciding vote on a 50-50 split to get it passed. And J.D. Vance is going to have to be the deciding vote on a 50-50 split in Congress to get this passed as well. So they're going to do it through reconciliation. They're not going to go through a 2/3 majority, but they need every single vote. Like if you don't get every single vote, it's not going to be the best thing in the world. Now, granted, look, Biden's Inflation Reduction Act, that printed a lot of money. It probably increased inflation. I mean, Trump's tax cuts, we don't know how we're going to pay for them, to be objective about it. We have no idea, because the tariff revenue is not going to be enough to pay for $4 trillion of tax cuts over the next decade. I get the whole cutting Medicare argument, even if it's for illegals. But dude, I mean, I don't know if Congress is going to be okay, even if there are people who came to this country in an undocumented way to not get Medicare from the United States, because at the end of the day, it's still people's livelihoods that we're talking about. So I think it's going to be a bit dicey to get this passed. And if they're trying to go through Medicare, the Democrats are obviously going to blame the Republicans off cutting Medicare for, you know, their rich friends. So it'll be something that's very highly politicized, and we're going to have to see how the market thinks about it. But one thing is for sure, I don't know how we're paying for the tax cuts. Like, I still don't have a plan by the administration. I mean, you could say growth, but we're going to have a hell of a lot of growth to be able to pay for it. You could say tariffs, but I think as tariff rates come down, tariff revenue is not really going to be the defining factor here. So we're going to need something to figure out how we how we pay for that stuff. And again, that's another reason why people get bet on Bitcoin, because, you know, Doge has been, can we just admit Doge has been a failure? Like Doge has done nothing. And even if they cancel 100 billion or 200 billion, Doge is not going to do anything, right? So Doge is not reducing the deficit. The 10-year doesn't care about Doge anymore. They did care about it in January. Now they don't. Elon's probably realized there's too much bureaucracy, and, you know, he kind of needs to make Tesla stock not go into the gutter. So he's not taking that much time in Doge anymore. So Doge isn't really working. Trump's going to pass massive tax cuts. It's almost the same as Biden with the Inflation Reduction Act. Like, what is the solution? The solution might just be Bitcoin, because as Lynn Aldrin would say, nothing stops this train. Nothing stops this train. And we are just going to keep printing at the end of the day. Nick says, I feel like the whole Doge narrative is gone. I mean, Elon doesn't even talk about it anymore. So it's not even me saying it's gone. I've yet to see an Elon tweet in like the past 2 weeks that meaningfully is trying to communicate to the public that Doge is reducing some budget that would actually decrease the deficit. I think he realized the only way to get rid of trillions of dollars of spending, like he advocated for back in January, is Medicare, Medicaid, and Social Security. And in this country, you can't touch Social Security. So it's just going to be hard. It's going to be really hard to actually cut. Is $120 billion nothing? Yeah, dude. 120 billion is not even a penny in regards to our overall deficit. And so, like, yeah, $120 billion looks good, but Elon promised $2 trillion back in Madison Square Garden in December, and, you know, super ambitious. Even if he got to $1 trillion, I think people would have been happy, but it's just not happening. Like, we got to be real with ourselves here. So I don't know if in my lifetime we're gonna do anything meaningfully about this deficit, which just means our kids are gonna have to deal with it. But hopefully the rest of the world continues to buy our debt. We continue to have enough growth to have GDP growth that can sustain dealing with this deficit. People across the world still want to invest in our companies because they're the best companies in the world. We have the best military in the world. All of that will protect our stature as the United States. But I don't know if we'll actually create a surplus on our budget. 120 is better than zero. That is correct. It is better than zero. I think the important thing about Doge is bringing to the government tech adoption and accountability, not so much of the dollar amount we see today. The results will be seen with time. Yeah, I agree. If Doge can put in structural changes inside of the US government to adopt technology so that they don't have to hire a bunch of people that aren't doing anything, and change the culture of how we procure not only software, but anything in the government, then that would be a win. But when Trump leaves, right, like, will that culture still maintain itself? I think that's going to be the big question. And, you know, hopefully that's the case, but eventually we'll have to see how it plays out. All right, let's get a little bit more coverage on some of that consumer sentiment data, and then we'll keep going from there. And I'll see what other different headlines we have right here going on in the macro.
I need to see some payback from front running.
For sure.
Their estimate is that real good spending probably dipped 0.5%.
Right. I mean, you saw that in places like cars,
Yeah.
where people were front running ahead of the tariffs and they were buying a lot of cars. And then so we weren't going to see as much car buying the following month. Look, it's going to be impossible to tell because a lot of these retailers have stocked up on inventories. They front run it too. And so until the inventories come down where they really have to raise prices, remember Walmart just this week said that it's going to start raising prices. We just don't know how that's going to impact the consumer. The other good thing, David, of the week, which I think is worth mentioning, is that no real alarm bells in the inflation data yet. CPI, PPI, and then this morning import prices as well comes in at 0.1%. It was a little bit more than expected, but still not so problematic. If you take all the inflation data and add that up, it's not, the best thing you can say is it's not like we're coming from a point where inflation was starting to flare up again going into the tariffs, which was a little bit of a concern this year. So for the Fed, I mean, they're still going to be wait and see. Let's see how the tariffs impact. But we got some pretty good news on all the inflation front and the consumer front this week, aside from the sentiment stuff.
Yeah, aside from the sentiment and the difference, obviously, as you say, in terms of what reality is, at least in the market.
By the way, sentiment not affecting the markets. Markets are green. Nvidia's back to 136. S&P is green. I mean, so consumer sentiment, I don't think the market gives a crap. S&P's at 591. First time hitting 591 on the day. So I really don't think the market cared about consumer sentiment. At least not on this report.
Marketplace versus what we're getting on sentiment. The S&P is, you can see it right there, up a bit, looking to add to a nice winning streak. It would be 5 days in a row, in fact, if we close higher. The major averages are on pace for what would be their third positive week of the last 4. Joining us now is JPMorgan Asset Management Global Strategist David Kelly. David, good to have you here.
Glad to be here.
I don't know. I know you've been walking around, but we just got the sentiment data. Very, very weak. Does it matter?
Not actually for consumers. First of all, I would be a little careful about this number. They only poll about 250 to 300 people, which is way too low for a survey in the first half of the month. So the survey sample is.
They surveyed 200 people, bro. This has got to be a joke. We have got to stop caring about Michigan. How we have 330 million people in the country. I mean, this has got to be a joke, bro. Like, how does Michigan not have the resources to survey at least 1,000 people? There should be zero impact on the survey on the market. 200 is just a joke when it comes to trying to figure out what Americans actually think about inflation.
Size really small. In addition, they made a change to that survey last year, moving from telephone and
yeah, there's more people in the chat, bro. There's more people in the chat, dude. I could do a poll right now and survey you guys in the chat like that, dude. Come on, bro. This is the survey that gets all the mainstream coverage. This is wild.
Interviews to online interviews, which we think cost them 6 points. So it's not quite as bad as it looks. I mean, it is. But having said that, look, consumers are resilient. But there comes a point where you squeeze them enough in terms of tariffs, we're collecting on the student loans again, and then just the general worry that and of course the cutbacks to the government sector, all of these things I think are beginning to weigh on consumers. So I think it is slowing the economy down. Still not willing to say recession.
Right.
The really key question here is not consumer behavior, it's business behavior. Because businesses seem to be so reluctant to lay people off. They had such a hard time hiring people the last few years that until they see the whites of the eyes of the recession, they don't want to lay people off. And actually, when you look at retailers, until they see the whites of the eyes of recession or the tariffs, they don't really want to push up these prices. They'd rather say, well, look, on the current stock, this is what it cost us. This is our markup. Here we are. Now, the new stuff that comes in at the ports, that's going to be more expensive for us, so we're going to mark that up. But I think they're also playing wait and see. So everybody's waiting to see what these tariffs really do to the economy.
Well, looking at JPMorgan's analysis of retail sales, we just mentioned it, but if in fact they're eating some of the tariffs through their margins, your argument is that's not good for the economy either.
No, I mean, the whole and the uncertainty. I mean, there's this uncertainty tax which is being levied by Washington, which is bigger than all the other taxes combined. I mean, you have to, in business, small business, big business, you have to make decisions. And what happens is everybody freezes. And what I think people don't realize is we've got such a dynamic labor market. And if you look at the job openings labor turnover report, we hire 65 million people per year in this country. 62 million people lose a job, but 65 million people get hired. That's 250,000 hires per day. If you just hold off a little bit, maybe let's just put a pause. That's we're not going to approve this hire. You just do that a little bit, it can really slow the economy down.
We're not seeing any signs of it yet, are we?
No, we're not. At the moment, I'd have to say, the tariff pullback and also this big tax bill, which is going to put stimulus into 2026 and a little stimulus into 2025. That takes us from more than likely going to have a recession to less than likely going to have a recession this year. So I think the economy may be resilient enough to avoid recession, but it's going to be slow growth for a while.
Although one caveat you guys threw out there this week was that there's a chance those things don't go as well as some hope, the regulatory and the fiscal stuff.
Oh well.
All right, I put a poll in the chat right now for all of us. We just need 200 votes, and we'll be more accurate than Michigan consumer sentiment. 2.1 to 2.3, 3 to 3.5, 4% or higher, or 2% or below. Those are the choices for inflation 1 year from now.
Yes, I mean, first of all, it's going to be a difficult thing getting this whole bill through Congress. But the other part of it is, longer term, we're pushing up the deficit again. We're going to end up in 4 years' time with a deficit close to 7% of GDP. It's 6% of GDP right now. It's going in the wrong direction. And
because of slower growth.
Well, part because slow growth, but guess what? We've also had another dose of fiscal fudge. We've got four years of tax cuts.
The tax bill
is paid for 10 years of future spending cuts, and we see this all the time.
And we hear warnings about this all the time. But is there really any evidence, David, that it's going to stand in the way of an equity market rally or even a bond market rally? Even when we had these higher yields, we were wondering, is the deficit front and center again? But guess what? Then we see buying reemerge.
The bond market maybe because. We're going to have to spend $2 trillion per year financing. We're going to have to find $2 trillion per year just to finance this deficit, going up to $3 trillion. And we also have this ongoing tariff issue. We're going to be close to full employment. We've got less available workers. All these things say to me that inflation is not going to collapse. If the economy doesn't collapse and inflation doesn't collapse, the government's borrowing all this money. Pretty hard for the long end to rally that strongly.
Does that become an issue for equities?
Yeah.
Ever?
I think it's all an issue for U.S. equities, U.S. fixed income. I mean, 60-40 portfolio has done so well for so long. People got to calm their expectations here, diversify. International still makes a lot of sense. Value stocks still make a lot of sense. There are plenty of things to do, but don't just bet on large cap growth stocks with a little bit of bonds added in and expect to get double-digit returns per year, because I just don't think that's where we're headed.
And you don't think
So the biggest concern that JPMorgan has, which is a fair concern, is our deficit, right? It's our deficit, and I think that's a legitimate concern as well. Ultimately, we're going to have to do something about that deficit, S&P 500, 591. But the bond market is kind of calming down today, folks. I mean, it was ripping higher yesterday. It's at 4.416. That's not amazing, but it was at 4.537 yesterday. So nice to see a little bit more pressure in terms of buying bonds and reducing yields. But yes, we do need to figure out how we're going to manage this deficit. And, ultimately the Republicans, I think in this new bill, they're trying to get past trying to have a better understanding of how to communicate what's going to happen to the deficit and where the growth is going to come from to ultimately be able to pay for the deficit that we're seeing right now. But overall, that consumer sentiment survey, it just doesn't make a lot of sense. It really does not make a lot of sense when you think about the types of skews they're getting in their answers and the fact that there's only 200 people that they surveyed. Like, are they paying people for these surveys? What are the biases? It's just really hard to think of it. Here's the results of ours. So we have 1,043 votes so far. And in their answers, and that is what is this? That is 44% at 2.1 to 2.3, 30% to 3 to 3.5%, 11% to 4% or higher, and 15% to 2% or below. So the majority of you say we're going to be stuck in this 2.1 to 2.3, which I kind of would agree. I don't think we're getting to 4% or higher. I don't think it's going to be below 2%, but 2.1 to 2.3 is not that crazy. Yeah, there's also political stuff. I mean, they might be asking Democrats and stuff. It's weird, dude. Like University of Michigan is one of the wealthiest colleges that's not an Ivy League in the United States of America. For those that don't know that college, I mean, it's a hell of a college, big business college, big sports college for football. They have the money to allocate to be able to figure out how to pull 1,000 people. Also, like, there's something called the internet. If they're actually phone calling people versus just like setting up different accounts on social media and then being able to reach out to people, that there's a lot of ways to access people's thoughts and opinions without having to literally call them. It's just done in such a 19th century way. And then you only do it 200 times. How could that possibly be respected? And obviously the market's looking past it right now because we are continuing to stay green and the market just doesn't care on that. CoreWeave right here, really getting some good love, dude. Who's in CoreWeave? Who's in this stock? Put in the chat if you're in this. Up 18%. I know Tanner was excited about CoreWeave, so he's in this one. I think it's kind of a delayed earnings reaction. I don't think there's any actual headline today. But yeah, call options on this one must be going crazy. And if you're in it, you must be having some fun. CoreWeave right here, 78.10, up 18%. 18%. Nebius, we talked about that yesterday or 2 days ago in the market close. That one's up 7% as well. Not bad. These data center plays, they're benefiting off Nvidia. By the way, Doug McDermott, the CEO of ServiceNow, he was on a talk yesterday at a conference. Here's what he had to say about Jensen Huang.
Funny, because the first time I had a serious conversation with Jensen, he told me, Bill, we got to build a company that if everyone called sick on the same day, the company would function without any problems because of AI. And if you read into that, there's a lot to understand, but that's the wisdom of this man. And I really connected with him on a human trust level. Of course, I admired him greatly. And when you talk about the greats of all time, you got him right here on stage. And so that was an honor to team up with him. But I always said that trust is the ultimate human currency. And, you know, he could be in a lot of places today. Jensen's a pretty busy guy. Nvidia's doing pretty well, in case you haven't noticed. But he's here. He shows up, and he wanted to be here. And I think that's really it. Last year, we were talking about animation and voice-activated agents, remember? And now we're talking about reasoning models connecting workflow data fabric to a control tower to monitor team of agents working with an open architecture, all hyperscalers, any data model, any system of record, just be the central nervous system. I like to think of it as the supercomputer, right? Yeah. Meets the data processing automation workflow platform of ServiceNow and changes the world.
Hell of an endorsement by Mr. Bill McDermott. This guy's a cool CEO, dude. I feel like we need to talk more about this guy, but we don't talk enough about him, but he just looks like a cool CEO. Bill McDermott talking about how special Nvidia is. Lords, thank you for the $100 super chat. Really appreciate that, brother. ODD, it's funny that you bring it up because it has to do with makeup. So appreciate you for, first of all, for the super chat and being here. Data-driven investing actually commented on my Estee Lauder post yesterday around Michael Burry. And he said, I actually think ODD is the better play than Estee Lauder. He says, I think they're the best play in the industry over ELF and Ulta. And I haven't really fully looked at all these numbers, but when he looks at the free cash flow margins, the total revenue changes year over year, the net profit margins, oddity tends to look like a better company. So this is one that I think we can look at if people are getting more interested in the overall makeup sector. That stock right here is up a little bit on the day. Year to date, ODD is, wow, 50%. Not bad. Definitely not bad at all. Again, for all of the people that are freaking out in the comments, I don't know what to do about how you feel. Like it's okay if you don't know how to pronounce words. You don't have to take out your anger on me. But just because everyone says something doesn't mean it's the right way, right? So all of you guys are saying it's pronounced differently. That doesn't mean that it's actually pronounced differently. That just means you guys are influenced by propaganda. Propaganda coming from Sundar on Google, because this is what Google says.
Estee Lauder.
Like, this is why Google stock is in the gutter. This is why Meta's kicking Google's ass. You know, like when you've got that type of propaganda, obviously your stock is not going to benefit. I mean, Google can barely break over 170, probably because they're trying to brainwash people to think in a certain way. So look, I think it says more about you than me. That's what I told my ex. It said more about her than me, you know? So 167 right here on the Googs. What else do we have going on? Nvidia 135, Pounter 128, Robinhood 61. Adam's going to be joining the channel in about 20 minutes. So we'll have Adam onto the show. It'll be super fun to see what he's been up to and what he's doing in the option selling world. SoFi 1371, that's up about 1% currently right now. Broader markets kind of just chilling right here and nothing too crazy happening across the board. Your ex from Grindr. Dude, I hate you guys. Where's Grindr, by the way? 2354, just below all-time highs at $24. Why is Fubo up? I don't know. Why is Fubo up? 321, 8.77%. Well, Fubo's breaking out a little bit. It was at like $6 or $5.50 after that Disney lawsuit was dropped a couple months ago. But Fubo right here up 9% on the day. What are you guys doing over the weekend, by the way? Put in the chat what you're doing over the weekend. I forgot, today's Friday. So there's going to be no Pounter Weekly today. So no Pounter Weekly, but I'll be back Sunday for the future show. So market close will be the last stream for today. I don't really have any plans over the weekend. I'm trying to go see the apartment again. I'm texting the real estate agent and seeing if I could visit the apartment and get another look at it. So hopefully I can do that on Saturday. But outside of that, I'm not doing much. It is May though. Yep, barbecue. There you go. Barbecue with friends. Dude, this is perfect weather for barbecuing in the States, especially if you're in California or down south. So we are getting back to that weather again. You know what I want to do, bro? I haven't been to a pool in so long. I want to jump off a diving board into a pool. I feel like I haven't done that in like a decade. There's something really cool about jumping off a diving board And cliff jumping, like I want to do that one day, bro. Maybe this summer, I want to go cliff jumping. Like I want to, like, I see all these videos all the time of people jumping off a cliff, and it doesn't have to be the craziest cliff in the world, but just like, there's such a thrill and adrenaline rush you get from doing that. And I haven't done that in so long. I would love to do that this weekend or over the summer. I see a lot of barbecues in the chat. I see vetting when you tours. Okay, Jordan, are you getting married? That's pretty cool. It is wedding season. I have a couple friends. I have one friend who's getting married in Colorado in August. I might try to show up and crash that wedding. I even met him through YouTube, which is so crazy, right? The fact that I would go to someone's wedding who I met through YouTube, and now we've become good friends. So super, super cool that you're doing that. Amit, who is the coolest person's phone number you have in your phone? I wouldn't say phone number. It's more so Twitter DMs, I guess. And I will reveal who that is if I meet them in Miami later this year, because they're in Miami, and hopefully I'll get to meet them. So hopefully the Miami meetup, we get to take a picture, and that would be pretty cool. Yeah, VVV, Triple V is definitely, he has to be the coolest phone number I have. It has to be the coolest phone number. What else are people doing? So going out camping, going with the family, flying out for vacation. I love it. Buying some Estee Lauder. Can't go wrong with that. Birthday weekend with the friends. Sanjay, happy pre-birthday for you. Hopefully you enjoyed the birthday. Nick says, sitting there wishing the markets were open. I actually do enjoy on a Saturday the markets being closed. I enjoy kind of just having one day, because on Sunday, dude, as soon as I have a show on Sunday, and it takes time to prepare for the show. So like by basically 2 p.m. on Sunday, I'm thinking about the markets again. So Saturday is the one day where I try to just like not think about stocks and give my mind a little bit of relief. But 6 days a week, sometimes it takes that level of obsession to get this deep into the markets. Matt says, I've been married to the game. Yep, exactly. Been married to the game. Studying for the ACCA exam. Is that accounting, ACCA exam, or is that medicine? That is accounting. It looks like, yeah, management accounting. All right, cool. Dude, I sucked at management accounting my senior year. I absolutely sucked. Like, I've got to tell you a story one day on how I passed that class, because that was my senior year. I was having a lot of fun my senior year. Like, senior year from freaking September 2019 to December 2019. That was the first half of senior year. I didn't go to class. I didn't show up I had a lot of fun. And that was really the last semester before we had COVID. So I'm kind of happy I got to enjoy that final part of college. But the way I passed managerial accounting, you guys wouldn't believe how I found a way to get, I think I got a 65 in that class, but it was rounded up to like a C+ because that class was pretty hard and everyone, didn't do the best. So that was enough to get me, because if I didn't pass that semester, I would have to take it again. And I definitely didn't want to take it during the spring. So I kind of just have to get it over with. And I found a way. But yeah, shout out to you going through the ACCA exam. Amit, do you have higher conviction on Hood or Nvidia? It's a good question. I feel like the answer is Hood, just because long term, I think that wealth transfer is going to be big. And I think their ability to grow their market cap is easier. Like, Hood's a $40 billion company. I think they can get to 400 billion easier than Nvidia can get from 3 trillion to 30 trillion, right? It's kind of the same. I made this argument on Finance Junkies. I'm going to try to find the clip a while ago. And it was with Carlos and Vitaly when Palantir was 30 billion and they were picking Tesla over Palantir. And, they kept messing with me that I was picking Palantir over Tesla at the time. And I was like, guys, Palantir's 30 billion. Tesla at the time was still 700 billion. Tesla's now like 800 billion. I was like, I think Palantir goes from 30 to 300 way quicker than Tesla goes from 700 to 7 trillion. And I felt that was the most obvious argument in the world. Now, I didn't know it would be 30 to 300 in like 2 years. That part surprised me. But I just felt like it's a no-brainer that Palantir, given how special it is, if you believe in their moat, you believe in their leadership, yada, 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 that there's probably a shot that, they can have a better rate of growth than in their stock price more than Tesla. And that's kind of how this, this has played out. But I think the same thing for Hood. I'm super bullish Nvidia. I just think Hood's market cap can grow more than Nvidia, but conviction is heavy on both of these names over the long term. To be fair, Pouncer didn't have AIP back then. Yeah, that's true. I was saying that without AIP. So I was saying that with a lot of hope that Pouncer would just figure it out. But once they had AIP, that's when, things kind of changed. Thoughts on Meta? Look, I like Meta. It was below 500 when things dipped. I think Meta's going to do very well. Meta's probably going to be $1,000 stock in the next couple of years. I wish they would just split, bro. Like, I just don't want to buy 100 shares and spend $62,000 on Meta to write covered calls against it. I would love to spend $16,000 and buy 100 shares if they split with a 5 or 6 to 1 split. And then I would buy a lot more Meta, but I don't want to have Meta in the port if I can't sell calls against it, because the calls are too juicy and the volatility is too strong just to own it at this spot equity price. So for me, I just really want them to do a split. It would make it a lot easier for me to buy them. But I don't think there's a bear case to Meta, dude. I mean, there's obviously a bear case, but like Zucks is a ruthless killer who's finding a way to grow users every year. Reality Labs is eventually going to get profitable, even though it's losing some money right now. And I still kind of believe in his thesis on VR, AR. The glasses are coming. Like there's WhatsApp monetization barely started. The only headwind right now they have is the FTC antitrust case, but they don't have the AI headwind on search because their business is not rooted in search. So I think Meta is going to be really good over the coming years. Nvidia or Grab? Okay, I would pick Nvidia over Grab. I love Grab, but I think Nvidia is much easier to bet on than Grab. But I do think that Grab can potentially double before Nvidia. I just, like when it comes to sleeping well at night, I think it's same thing with Hood or Nvidia. Like if you want to sleep well at night, it's Nvidia, right? Because Hood, Grab, these names are still pretty volatile. They're still small companies, whereas Nvidia, the moat, it's just so much more established. It's harder for it to go through a downturn unless the AI trade dies off. And based on all the data we've seen this week, it's hard to imagine that AI is dying off anytime soon. HIMS or Hood, which stock gets into the S&P 500 first? Which one to 100? I think Hood gets to the S&P 500 first, but HIMS probably gets to 100 first, just because HIMS is very squeezy. But I think it's pretty obvious Hood would get into the S&P 500 before HIMS. I don't think HIMS has another $10 to $15 billion of market cap to go to even be eligible to get into the S&P 500 as well. All right, a little bit of data on that single family housing starts. Let's get some more coverage on that, and then we'll keep going from there.
On the street, new data on housing this morning as well. It's been a data dump few days. April building permits coming in a little bit lighter than expected, while housing starts did meet expectations. This after, remember, home builder sentiment yesterday fell this week to its lowest level in years. Joining us to talk about what's going on in the housing market is John Lovallo, UBS Home Builders Building Products Analyst, and Logan Mohtashami, Housing Wire Lead Analyst. It's good to have both of you here. Just Logan, big picture, what's the story right now?
Holdings need lower mortgage rates. Active completed units are back to...
That's pretty much what I said. That's the story, bro. We need lower mortgage rates. That's it. We need lower mortgage rates. All right, S&P is going red. Let me see if there's any news, if Trump tweeted anything. Let's see. We are getting a little bit more red. Trump has no tweets. I don't see any headlines. Remember, there's $1 trillion worth of options that are expiring today. So that obviously could create some more volatility. But we are getting some red. There you go. S&P 589, Nvidia Nvidia's down 1%. There she goes. Look out below. Palantir 126. All right, now we got some red candles. I don't see any headlines. I would reckon that this is when the algos on OPEX day might be getting involved and starting to crush some of these options. That could be happening right now. Joe, thank you for the super chat. I have come to realize I day trade better listening to you. You help me make decisions in a split of a second. Thanks to you, Mid. Be blessed. Joe, thanks for being here. Someone else said that during the week as well. Yeah, dude, I have a lot of respect for day traders. It's not easy to do, and you need second by second news to really understand how to kind of trade while you're looking with the charts. So I'm happy having me in the background helps you make some money. So thank you for being here, brother. Thank you for being part of the show. Pouncer 126.85, hoodie 60.85 as well. Hoodie, you see that red candle right there about to go red. Meta down 3%. All right, some things happening either in the news or with the algos, and I don't see anything in the news. So I feel like it's the algos. But even if we end 1 or 2% down on the day, it's been an incredible week. And so holding some of these levels will still be a good thing. There's the green on Nvidia. So it bounced at 133.55. Bounced at 133.55 and got some green. Now back at almost 134. Amit, did you see the 2 videos from Tesla of AI of FSD killing it in Australia and France? I think I did see those come across my board. Let me pull them up. The Tesla account tweeted these, I think. Yeah, here's the video. Okay, let's look at this. We'll take off the music. But there you go. Yeah, look, I agree, dude. It's Waymo is not really on this level. Waymo would also be more geofenced to be able to even make something like this happen. But Waymo's growing. Waymo is still growing, and I don't think we can deny some of that growth. But this is exciting to see, though, because it's like it really is the future, right? If Tesla does well in Austin, they get their California permit. The Saudis want a ton of robo-taxis. Then you get Australia and France that get excited. I mean, this thing, and then if the price actually is cheaper than a Waymo and a Uber and a Lyft, and people might not hate Elon as much, people might end up picking the Tesla over anything else. Dude, if this is Paris is crazy to drive through. This is like, even New York, I don't see this type of traffic, dude. There's so many twists and turns and motorcycles. Look at, that's like a 4-way intersection that's diagonal. That is why there's been 3 of those. Holy crap. Dare I say this is rivaling India a little bit in terms of complexity. I've never seen a video like this. Yeah, the roads are so narrow, bro. Why are the roads so narrow? This thing is like sandwiched between a couple millimeters. It's like a croissant. Yeah, dude. Holy crap. All right, to all my Europeans, bro, this is like, dude, I would not want to drive. I just want to I would want to take an Uber every day. Who would want to drive through all this? Like, you would have to pay so much attention to not crash every 3 seconds into a different car on these narrow streets. I feel like the use case for a cybercab here seems pretty vast. Oh, I've never seen a video like this, dude. Speed limit is 30 kilometers per hour. Wow. That's not even narrow in Europe. Dude. This is like, Amit is going to forget. Yo, it's so funny. Amit is going to forget to drive at some point. So my mom needed me to fill up gas in her car yesterday. And so I had to go get the gas. And I get into the car, Nvidia recovering a little bit, by the way. So it looks like that dip, if it was a dip, is starting to get a bit of a, yeah, look at that, dude. S&P 587 to 590. Wow. Market wants exposure, dude. Any little dip being bought up right now. Seems pretty bullish to see that being bought up. But I had to go get gas in the car, and I get in the car, and on a Tesla, it only reverses if you press down on the pedal. On a regular car, if you put it in reverse and you just lift your foot off the gas, it reverses. And it took me a second to be like, holy crap, the car's moving. I got to control the car. So it was a bit weird driving a gas car again versus my Tesla, because I've driven a Tesla for so long at this point. Okay, maybe I said bought up. Maybe I kind of combined multiple words to say that phrase. But again, you guys are influenced by the propaganda of the English language, and I don't know what to tell you. I don't know what to tell you. Brought up doesn't sound that crazy. If you say it real quick, it kind of sounds normal. But anyway, it was definitely weird driving that car. And then I had to pay $49 for gas. And I was like, dude, what is this, bro? $49 for gas? Granted, she has a bigger car, but still, I'm just like, it's just weird, bro. It's a weird experience now. It's a weird experience. European roads were designed for horses, not cars. Cars are having to fit within it. It must be amazing to walk through and travel in, though, right? Like those roads, just walking through all those narrow edges and being able to see all the different scenery. Like, I really got to do a Europe trip. I don't know if it's going to be this summer, hopefully next summer, but I really want to see a lot of parts of Europe. It feels really cool to be. But yo, people were commenting yesterday under my post, because I think I tweeted about Europe and traveling there. And someone was like, oh, make sure you come to the UK, but just don't get stabbed. And multiple people have said that like many times. So my question to the Brits here, do you guys have a stabbing problem? Like, is everyone just out there stabbing people for fun? Like, are there just knives galore inside of the UK? Like, what's going on here? Because multiple people yesterday was just like, yeah, make sure you don't get stabbed. And I'm like, okay, so I need to watch out for knives inside of the UK. It's a joke. Yeah, that's what I was thinking. I feel like it's a joke, but I feel like there's some truth to this joke as well. Only in London. It's a London problem. Yeah, it just, so many people said it that it's a national pastime, dude. There's no guns though in the UK, right? You guys don't have. I mean, America has a gun problem, right? So I'm not trying to dismiss America's issues. We've got our beautiful Second Amendment that has created issues as well. But you know, seems like there might be a knife problem in the UK. SMCI right here up 5.7%. Grab giving away a lot of its gains right here. Nvidia back to 134.50, Robin at 61.37, and then the S&P trying to get back to 591 currently right now. It's a people problem, not the tool. Well, that's true about the United States as well. I mean, unfortunately, we have some crazy people that get access to guns in the United States. HIMS is up 8%. HIMS, squeezy. There you go, 62.97 on HIMS. Do not wear expensive stuff. Dude, I really want to visit London, but I mean, I'm going to take that seriously because you never know, man. It's a new, I've never been, I mean, I haven't been to Europe in a while, so I just want to make sure I am safe in the region and understand how to navigate it, you know? Because it is a whole different. I mean, like my mom just went to Germany and Amsterdam, and they were, you know, they had a pretty normal time, but they were in a certain area. They didn't really travel that much out into the city. So it's just one thing to watch out for. The United States has more of a school shooting problem, though. We have a different like mental health issue. Like, yes, there is gun violence, and there's a lot of inner city gun violence in the United States, but the bigger issue is people having mental health issues and then deciding to come to schools and say, hey, I want to kill a bunch of kids. Like, it's sad stuff. And the Democrats and the Republicans have not been able to do anything about it when it comes to gun legislation. So the NRA's lobbying in these states is pretty aggressive. We just got to hope the mental health of this country does not decline to the point where people continue thinking that that's a reasonable thing to do. One who coming to London, hopefully soon, dude. I don't know if it's going to be June because, again, my grandparents are coming in June. They're staying for about a month and a half, and I still got to see if I'm going to that Robinhood event. But definitely is going to be happening, hopefully by the end of this year. I mean, if not June, maybe October, November we can make it. And if not, then early next year, because there's a lot of you out in the UK. A lot of you guys out in the UK. All right, we're going to have Adam on in about 6 minutes, and we'll get his thoughts on everything he's doing with option selling. For those that are interested in option selling, you'll be able to hear kind of how he's been playing it and how he's been thinking about it as well. I want to take a listen to this clip right here in terms of a recap from all of the different where'd it go? Hedge fund positions that we've seen. So let me pull this up right here just to kind of summarize some of the 13Fs, 13Gs that we've seen, and then we'll keep going from there. Adam should be on in about 5 minutes.
Look into the investment moves of some of the richest and most successful investors in the world. Leslie Picker joins us now in her deep dive into the 13F filings. And Leslie, good morning. What are the headlines?
Hey, good morning, Kelly. Yeah, it's really fascinating timing for 13Fs this quarter, which of course show fund positions as of March 31st, which was just a few days before Liberation Day shocked the market. So we were curious how investors traded Chinese tech during Q1, and much of it was pretty bearish. No surprise there, perhaps. David Tepper's Appaloosa paring back holdings in Alibaba, Baidu, JD.com, and PDD after making a big call on the space last year. Coatue sold JD.com, PDD, and sold shares in 3 Chinese fintech companies as well. However, Coatue did buy more Alibaba during the quarter. Tiger Global boosting its stake in PDD Holdings by 68% to hold roughly $500,000 as of quarter end. So a bit of a mixed sentiment there. Outside of Chinese tech, Berkshire Hathaway selling shares in the banking sector. Warren Buffett's firm unloading its entire stake in Citi and paring back B of A by more than 7% and Capital One by 4%. Berkshire Hathaway adding to some of its consumer-facing companies, however, also doubling its stake in Constellation Brands as well as Pool Corp, and it increased exposure to Domino's. The firm didn't touch its $67 billion stake in Apple during the quarter. Of course, that's always closely watched. And guys, Berkshire has a secret. Its 13F included a footnote that said the SEC granted 1 or more new holdings confidential treatment. So stay tuned on what that might be in the forthcoming quarters, perhaps, guys.
Very interesting. So
again, I mean, I'm really curious to see what Berkshire is buying. So a lot of you guys have said SoFi. I don't think it's crazy to say Berkshire would buy SoFi. The problem is he could buy any bank he wants and print money off the dividends. SoFi doesn't give him a dividend. So he's betting on a lot of growth, but he's not a growth investor. So although I think SoFi is not a horrible bet at all, it's like why would he pick SoFi over Bank of America? And the terms that he gets on his dividends, the special deals that he can get on the warrants as well, it's just a better deal for him to go, into another play. But hopefully we find out soon what he's going to do. TJ Ray, thank you for the $10 super chat. Love to see 80% institutional ownership in Grab. The 2 catalysts I see are the GoTo merger or share buybacks with an acquisition being better. I think one of those will break out. Same with the Grab warrants. Yeah, the Grab warrants are cheap. The only thing is they have an expiration and you have to get to, I think, $11 on the warrants by the end of 2026, which is, I think, very possible. But the warrants are definitely cheap. And I think those catalysts are very real for Grab as well. Mark, thank you for the $10. Regarding fund rebouncing and coin S&P inclusion, can they buy now or wait till May 19th effective date? Big fan, Mark from Switzerland. Mark, thanks for being here. I think they have to buy on the day of the rebound. So we saw that with Palantir, that they get included into the index, I think 2 weeks before they have to get rebounced. And they went from like 29 to 32 the day they got included. But then they went from 32 to 37 the day they got rebounced, because that's when all the buying actually happens. So I think these funds, they put in their orders and then it all gets executed kind of at the same time. But you're likely not seeing any Coinbase buying by the funds. You're seeing the stock go up because everyone knows there's going to be a lot of buying, which means people will be selling into the buying from the funds as well. That kind of offsets the percentage move. But Coinbase right here up 6.49% based on that Webull partnership today as well. Coinbase did have some nasty headlines though with Brian Armstrong. We didn't play the full video yesterday, so let me play it right here. What Brian Armstrong said about Coinbase and the hackers, but here was what he put out.
I'm going to pay your ransom. In fact, I have a few next steps in mind that I'm going to share at the end of this video. But for the rest of you watching, wondering what happened, we did an investigation here, and these attackers have been approaching our overseas customer support agents, looking for a weak link, someone who would accept a bribe in exchange for sharing some customer information with them. Now, our support tools have limited access to customer information. There was no passwords or private keys or funds accessed as part of this. But customer support agents do have access to personal information like name, date of birth, address, etc. And attackers still want access to this information because it allows them to conduct social engineering attacks where they can call our customers, impersonating Coinbase customer support, and try to trick them into sending their funds to the attacker. Now, unfortunately, they were able to find a few bad apples. Our systems are designed to mitigate the impact of something like this, so less than 1% of our monthly transacting users had their records accessed, but this is still unacceptable. And I want to tell you what we're doing about it. So first, any customers that were socially engineered as a result of this incident, we're going to reimburse them. There's more details on our website, on our blog post about the reimbursement process.
Bro, he looks scary, right? He looks like he's getting ready to really come after you based on what you've done if you're a hacker. Like, this guy looks like he means business when it comes to what's going on right here.
You can read more there. Any customers who have been impacted by this or have been notified at this point. Number two, we're hardening our systems around customer support to make something like this much more difficult in the future. And third, we're actually relocating some of our customer support operations as a result of this. But the last step is maybe the most important, which is that instead of paying this $20 million ransom, we're turning it around. And we're putting out a $20 million award for any information leading to the arrest and conviction of these attackers. For these would-be extortionists or anyone seeking to harm Coinbase customers, know that we will prosecute you and bring you to justice. And now you have my answer.
Bro, even the way he ends it, and now you have my answer. Like, this guy, absolutely taken vibes is what I'm getting from Brian Armstrong right there. And he's, yeah, he's not playing around with a lot of these people. Real quick, guys, I just checked Brad Gerstner's fund. So one thing I didn't check yesterday is what he sold. I saw he bought Robinhood, which I'm happy about. I didn't check what he sold. Here's the updates on what he sold. All of his Salesforce, all of his Duolingo, all of his Google, all of his IoT, all of his Micron, all of his Tesla, 355,000 shares, all of his TSM, and all of his Twilio. So Gerstner definitely rebalanced and took some profits on a lot of these big names, Tesla being the kind of big one right here, and Google. And he kind of rebalanced that into Nvidia. The new ones, again, these were the new ones. ARM, Baba, CoreWeave, Robinhood, and Sail. Those were the 5 new ones. And then the ones he added to were Amazon, Instacart, Confluent, Flutter, Uber, Zillow, Coupang, and then ALAB. ALAB, that's Astera Labs. So that's what Mr. Brad Gerstner did. All right, cool. Let's get someone onto the show who hasn't been on in a couple months. Very excited to have a conversation with them, even though I talk to them pretty much every other day because he is a personal friend of mine. He is someone who retired at the age of 41. And he's going to give us a little bit of inside game on how he did it and how he's supporting his lifestyle today. Ladies and gentlemen, the OG of hymns at $3, the OG of Palantir at $5, Mr. Adam Bergman. Adam, what's up?
What's going on, Ahmed? How you doing, brother?
I'm doing good, brother. How are you?
Good. Can you hear me okay? You don't hear the AC in the background?
No AC. Everyone audio good? Put a thumbs up, audio good. I think you're good. So audio should be good.
Thank you. Thank you so much, man. Thank you for having me on the show, bro. Number one, congratulations on your great success. I can now tell everybody I have a famous friend in media.
This guy gasses me too much, and it's annoying every single time. But yeah, I love this guy.
I'm extremely proud of your success. You are literally amazing. You are an inspiration to a lot of people. And yeah, am I really glitchy right now?
No, you're okay. Good. Oh, you're good.
All right, cool.
You are good. The big thing about Adam that people don't know is, again, he was early hymns, early Palantir. He's made money before YouTube and the stock market. I mean, he's been pretty successful his whole life. But the number one thing he told me 4 years ago was work your ass off. Work your ass off. You're 22. Keep working. Things are going to work out, but you got to be consistent. And you don't have a wife and kids right now, so this is the time where you have the freedom to work in. Took your advice. Just kept working.
Dude, it's and I can't stress this enough. So everybody should have a path in life, and this is what worked for me, and this is what I'm trying to show Amit, and this is what I suggest to everybody. Not financial advice is in your 20s you can always recover. So you work as hard as you possibly can, you grind as much as you possibly can to make as much money as you possibly can. 30s you grind a little bit less, you calm down a little bit more. and you start, looking for a house, so on and so forth, for family. And by the time you're 40, you don't take any more risks. It should be your last risk, and then you're enjoying life. And I'm, living, breathing example of doing exactly what I preach.
So let's get into your story, Adam. I'm going to link Adam's channel right here in the description. You guys can all subscribe to his channel and get more information on what he's doing with option selling, which we'll get deeper into. But take me back to 2024. You made a big play that kind of set up your portfolio, set up the trajectory for your life. What did you do last year, and how did you get to where you are right now?
Yeah, so about a year and a half ago, 2 years ago, I had a YouTube channel that some people might know me from. And I was talking about a bunch of different plays. Some of the plays that I was talking about was Palantir. Some of the plays I was talking about was HIMS, Hood, Cam the Doors. People are looking at the comments. On my computer, it's laggy, but my camera's okay, Amit?
Yeah, you're good. You're good. No worries.
Yeah, cool.
Yeah, you're good.
So I was talking about a lot of different stocks, and about a year and a half ago, I got off of YouTube because I'm like, listen, I just didn't need to concentrate on actually making it, and it was hard to concentrate on plays and stocks, so on and so forth, while I was online. And I started buying a lot of options. It all started in COVID, like 2019 was COVID. 2020 February, I started investing in Moderna when everybody thought that COVID was BS and nothing's going to happen. I made around 7 figures on Moderna. I took that money, started investing it into Palantir. I started getting into Palantir in mid-20s and buying all the way down. Hit with Palantir. At the same time with Palantir, I was also into HIMS at $3.50 when I could not pay people to listen to those videos. It was the funniest thing in the world.
This must be crazy for you to see all this hype 2 years later, right?
I find it funny that a lot of people that were hating on this stock now are calling it an amazing stock, and the people that were hating on it did not want to touch it with a 10-foot pole. And then when I was explaining it to people, they're like, nah, this makes no sense, blah, 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 blah. And now they're on the HIMS bandwagon. So the same people that were against HIMS when I was talking about it at $3-4 are now like, HIMS is the #1 stock in the world. We knew about it. We were talking about it for the longest time. That's kind of funny. Similar to Palantir, you have a bunch of new Palantir channels that are now like, oh, I knew about Palantir. I was talking about it at this price, at that price. No, you weren't. You were hating on Palantir. You were shitting on Palantir, and now you're joining the bandwagon. But that's okay. So HIMS, Palantir, Robinhood with you, SoFi, I was in and out several times. I was able to clip it, get out, clip it, get out. And then what really, really, really did the thing was crypto. Besides for Bitcoin, I went into a lot of leverage plays. For example, MicroStrategy. Again, when nobody wanted it, MicroStrategy was trading at $480 pre-split. Nobody wanted it whatsoever. And I was buying it. Not only was I buying it, I was buying options on it. And so while MicroStrategy did good, I was doing like 10X's on it. And then at the end of last year, I had enough money to retire. And I retired. I sold out of a lot of positions and reevaluated. And now I make money through dividend investing and also options premium. And I still have a few options, long dated options to keep, asset appreciation. And I started my YouTube channel that's kind of started to take off because people kind of remember me talking about these stocks. Unlike a lot of YouTubers that are full of shit, absolute liars, never made money in their entire life, which is one of the worst things in YouTube. I was talking about it, and there's proof on it online. Just look at my former videos. All my stocks hit. Not all my crypto hit, but all my stocks hit.
So what is that like? It's a very privileged position to be in your early 40s and to have, newborn kids, to not have to be able to work because of the stock market. Obviously, it's not replicatable for everybody. And there's definitely some luck, right? In terms of understanding Bitcoin,
100%.
The MicroStrategy thesis, all that stuff. But you did it. And what is your lifestyle like right now before we get into the option selling and what you're doing day to day?
I sleep a lot better these days. When I was heavy into MicroStrategy, I could have been up and down $1 million on my portfolio every day. Just let that sink in. Up or down $1 million a day is unbelievable amount of stress. Like unbelievable. I can't even stress how much stressful that is. And now I have one more crypto run that I still think that there's one more run. I'm going to use that to pay off my taxes. And then that's it. I'm retired clean, if that makes sense, because I have no more obligations. It's great, dude. It's great. I get to do my hobby, which is make YouTube videos. I get to show people how I did it, and I get to enjoy my family. So every day I drop my kids off. Every day I pick my kids up, and I am lucky by the grace of God to enjoy their, every moment, do whatever they, whatever they need, play with them. And I didn't really grow up with a father, so I'm trying to be the best possible father for my kids right now.
That's another thing that I think we forgot to mention. You had some very humble beginnings, some very, very humble beginnings. Adam did not come from money. The one story you shared with us, like I think 8 months ago on the channel, you had a brother. Your mom got you guys a slice of pizza. Did not have the money to get 2 slices. You had to split the pizza, right? Like it's those types of moments where I say it's luck in terms of, the plays you had on MicroStrategy, but it's luck due to timing. It's not really luck due to the fact that you are studying the industry, the markets, what it means to buy a call option, Bitcoin, etc., for the past 5-10 years to get to this point.
Yeah, absolutely. Just one correction. It was my sister, not a brother, but the story is 100% correct. We lived in Brooklyn, and there's an area called Brighton Beach. And there was one specific pizza shop. And I remember coming back there many years later, and the guy remembered us every single time we come back. He's not there anymore. And my mom used to split one slice of pizza for us, and she made sure that we got a pizza just to feel like other kids, because it's really nice to go out. But, you have a single mom, working immigrant mother, and taking care of us. And that's why I'm so thankful. And now I take care of her. I make sure that she has everything that she needs, monetarily, but also emotionally. And me and my sister are both excellent children, just like you are with your sister for your mom. Your mom is very similar. We grew up in a very traditional household, the Indian household, the Jewish household. It's very traditional upbringing. But yeah, I was successful before this in terms of I had a business for like 22 years, and I had real estate. I sold out of my real estate, almost all of it. I only have like 1 or 2 properties left. And I put that all into the stock market now, because I'm like, why do I have to deal with tenants when I could just rent my stocks, as TJ says? And I really got heavier into stocks in like roughly 2017. I started getting into it, stocks related to crypto, GBTC, things like that. And I made 100,000 in like 1 month from GBTC. And I'm like, that's crazy. How did that happen?
And that's never happening in the real estate industry.
No, never. And it's not as liquid. People say, oh, real estate's liquid. It's kind of liquid, but this is really liquid. It's been amazing. A guy who he gives you 1% a month. He does mortgages. So they do mortgages, and it's like a separate company, private company. And he's like, oh, I could give you 1% a month. And he's like, oh, if you would have invested the 500K, you would have had 27,500 now. He sent me like an email. Very nice guy. And I told him, I said, to be honest, I 10x that this year alone. So you're telling me I'm going to make 27K. I already made 10 times that this year already. And some of that is tax efficient through the dividends. I said, and I can't use your money as collateral. So if I give you 500K, I'm stuck at that money. I have no appreciation. I have no collateral to use it as, and I'm still making more money on it. So I was like, stock market is the greatest game on earth, like you said, and it's changing people's lives, right? I was on a call right before I spoke to you, and this guy started selling options 5 years ago when I first started talking about it on my other channel, when nobody cared about it. And he's like, Adam, I'm near retirement right now. He's like 50-something years old. Shout out, I'm not going to mention his name. And literally, he's like, I'm an inch away from retirement. And he's like, I'm just following what you talked about 5 years ago when nobody could care less about what you were saying.
Right.
So it's been a dream. I'm going to Florida right now for 12 days with my children and my wife. It's amazing. We're going to go look at some houses in Boca and Parkland. You can do whatever you want, whenever you want. It's amazing.
Yeah, and I think the thing about this is not get rich quick. This is not get into some coin and get out before it dumps. This is not an MLM where you have to get the other guy to get the other guy. This is something that the hedge funds and the money managers and Warren Buffett does every single year in regards to selling or buying volatility in the equity markets. We have a $30 trillion stock market. So as Adam said, it's very, very liquid, which is a bit different from real estate. And anyone, literally anyone on the planet can watch some YouTube videos and learn how to do this. They're not going to be perfect at it. They're going to make some mistakes. You and I have made mistakes, but they're going to have the ability to kind of learn and understand how to use this as a form of leverage. And that's what matters.
Yeah, absolutely. And it's amazing seeing people come up. Like on my channel, I started kind of my last 2 videos. I made one on SoFi, one on Rocket Lab, how to manage a small account if you have under $5,000. Those are starting to take off because people really want to see what it is. It's amazing. I got this one guy. He's part of Jesse's Discord. Shout out Micro to Macro, Jesse. I'm part of his Discord, trying to show people these things. And he made $10,000 last month, bro. $10,000 on hood options. First time he started. Imagine 10K. He's like, Adam, that's insane. I was like, yeah, and you're doing it too. You're killing it. You're making thousands too. I speak to you.
Yeah, it's doing well per month. And like, 2 years ago, making 10K in a month sounded crazy. But as the account grows, and to some people in the chat, they're like, oh, 10K is crazy. But as your account grows, it's not that crazy. Then it turns into 20K and 30K per month, not per year. And it is very, very possible if you take the time to learn about this. My mom sold some hood options, some hood covered calls at 62 or 63 for next week. And, she understands puts, but she doesn't really understand the call. So I was explaining to her yesterday and she was like, I just made $300. I was like, yeah. And if it gets called away, it gets called away, or we can roll. Like, it's a level of freedom and autonomy. And she's doing it on like a $50,000, $70,000 account. When it's a $500,000, $700,000 account, things change. And so it's very, very liberating. So let's get into the nitty gritty. Let's get into some alpha. What is your strategy? What are you doing? How are you navigating puts, calls? How are you philosophically thinking about dividends, income generating ETFs? I'm going to give you the floor. And then can you give a very basic explanation of those strategies for those that are new here?
Yeah, no, 100%. So roughly 10% of my portfolio right now is in long-term options, whether it's a debit credit spreads, long options in general, so that I could keep continuing to have asset appreciation. A lot of my portfolio is in high-paying dividend yields. For example, I love covered call ETFs because I'm super familiar with covered calls. So QQQI, SPY-I, IWMI. I have some Bitcoin ones. I also diversify into 25 different ones. For example, preferred share ETFs and BDC ETFs, energy ETFs, companies like ET, BTI, things like that, high-paying Verizon, that paid me high interest, high yields.
By the way, this is not you're YOLOing on like Rocket Lab. This is like really safe shit that is a decent chunk of your portfolio.
I mean, a huge amount. The other huge amount of my portfolio is actually in even safer things where SPY, QQQ, Google, Amazon, Meta, Nvidia, Tesla, if you want to call it safe or not, but really, really big companies. I hold a significant amount of Robinhood right now, but I'm deleveraged, not options. I sell options against those. So that's the basic plan. The reason why I have to SPY into QQQ is because I know that, God forbid, anything that happens, by the time I'm retired, I'm still going to be very comfortable in my life without giving any numbers. So no matter what, selling options right now and those dividend ETFs, that's actually even more riskier than my non-risk, which is just a SPY. I'm not going to do anything. Just let the SPY grow. I sell options against that. I use it as more income. It is what it is. And then I sell options. So I sell covered calls and I sell cash secured puts. A covered call is when you own 100 shares of a certain stock. That gives you one option. It's the right to say, I'm willing to sell my shares at a certain price called the strike price at a certain date, which is called the expiration date, for a certain price, and in exchange, you get something called a premium. So when you are buying a long-dated option, you are paying for it. Well, somebody is selling you that. I'm the bank, I'm the seller, I collect that money. Most options expire worthless. Roughly 85% to 90% don't make it, which means if you are selling options, 85 to 90% of the people selling it are going to make money. Cash secured puts is when you are saying that I am willing to, aligned with Adam on dividends. Yeah, I am willing to buy shares at a certain price at a certain date. That's a cash secured put, and you are securing it with cash. You are putting up your cash to buy those shares at a certain date later in the future. The caveat is covered call if you have a strike price of $100 and the shares are now 110, you still have to sell it for 100. So the only problem is you might not make as much money, but you are still making a significant amount of money. In some cases, you're making more money, which I could explain. Cash secured put, you are saying I'm willing to buy. Let's say I have cash secured put. I'm willing to buy SoFi at $14. Currently, it's trading at $13.60. I would have to pay $14 for it.
Right.
But there's something called wheeling and rolling, and I've literally been underwater in my SoFi plays, showing you guys on my channel 100% transparency. And I've been selling these since late February, early March for the last 4 months. I just made $21,000 like 3 days ago, rolling it again. And it was as low as $9, and I was still able to roll, even though I had a $14 strike.
Right.
So that's the general of cash secured puts and covered calls. And in general, you could look for, I do 4 weeks out. I do roughly a 20 delta or lower if I want to be safer. And I'm collecting roughly 2% on my money or more every single month. If you're doing crypto, you can get up to like 5 or 10% on your money.
That's
But to be
2%
safe,
across the entire portfolio. 2%.
yes, I'm actually doing more than 2%, but the minimum is 2% across the portfolio of whatever I'm willing to put up.
So that's
right?
that's minimum of 24% a year. And some people might say, well, if the S&P goes up 24%, won't you just invest? That's just easier. The difference is you're making cash flow with that 20. That's actual income. That's not stuff that's just stuck in the index waiting, right? On that 2%.
Correct. So you're making income, which then funds your lifestyle. The problem is we're so greedy and so hungry to make money. Everybody is by nature, the human nature. You want more. Well, any appreciation, anything you want, watches, chains, money, whatever, nice cars, so on and so forth. That you are so busy trying to chase it, you don't take a moment to breathe, thank God, and enjoy your life. So to answer that question, how do you enjoy your actual life? Well, you need steady cash flow. How are you going to get steady cash flow if all you're doing is buying long-dated options on Palantir and Robinhood and HIMS and any stock? You need cash flow. How are you going to get cash flow? Either you work or you get dividend income and you supplement that and turbocharge it with options income premium. It's as simple as that. It's a very simple formula that people would be amazed how simple it is.
You do have to pay some taxes. That's inevitable. But besides that,
yeah, you got to pay taxes. But it's funny. I got my technique for this. I was just talking about it earlier to a guy. So for every single dollar that I make, it doesn't make a difference. Every single dollar, I'll pay myself 50 cents, and 50 cents I'll put away in treasuries, GOV or BIL, which is a stock for short-dated treasuries. That allows me to gain roughly 4% in dividend yield, no city or state taxes. So if over the course of the year, in the beginning you're getting more, and then at the end of the year you're getting less, it averages to roughly an actual 2%. So you're reducing your tax bill by 2%. I never touch that money until taxes. So you know you have the money ready to pay for the taxes. And the greatest thing of all, Robinhood lets you borrow against the money you put away for your taxes. And guess what? You sell more options and you collect more money. So the more money you put away for taxes, the more money you make to pay those taxes. Sick.
Okay, so let's talk about this. Now, you are a more sophisticated investor and trader, which is why you use margin. This is not an endorsement for anyone to use margin. If you're going to borrow money from any company or broker, you have to be ready to understand the implications of it. So no one should touch margin until they really understand what they're doing. But one of the things that's most impressive to me about margin is that there are not many places on the planet where you can go up to someone and say, hey, give me $100,000 at 5.2% a year, which is what Robinhood's interest rate is. It's pretty much the lowest rate across the board. They're going to be like, screw you. Like, what are you giving me for me to get? Like, most personal loans, you're talking about at least 12%, if not above that, especially based on your FICO score, credit, all that stuff. But with a margin account, your brokerage has something that's really beautiful. It has assets. It has something they can back the money they give you to loan out from, because if you lose their 100,000, they'll sell your 100,000 of Tesla. They'll say, okay, Adam didn't pay us back the 100,000. Here, his Tesla's gone. It's back to us. So can you speak a little bit about how you've been using leverage to maximize the returns and how it's a bit different than collateralizing with real estate?
It's amazing, bro. So crazy. I will. And I just wanted to say one thing before I go any further. I am no different than you guys. In high school, I literally had 2 pairs of, those jumpsuits. That's what I was wearing every single day, right? It's no different. And then you come up and you hustle. So anybody that's saying, I don't have money, I don't have this, I don't have that, excuse my language, figure it the F out. Figure it the F out. That's it. Take 1 million side hustle jobs, start making money, and start small. And it really is a snowball effect. And I'm not trying to be...
No, you saying that is not obnoxious at all. This is an investing community. This is an ambitious community. This is a finance community. That's just the hard truth. I was broke 3 years ago too. Like, you got to just figure, and it's hard figuring it out, but the beauty of life is in trying to figure it out. And eventually when you do figure it out, it can be very rewarding.
Yeah, and you're well on your way to become much wealthier than I am at the time you're going to get to my age. And I say it all the time with so much love, and I would be so happy, bro, jumping for joy. Like you are killing it. So Robinhood essentially gives you your own entire finance world. You don't need anything but Robinhood. God bless Vlad, God bless his partners, and God bless the entire platform, because I would not be where I am today without him and the entire platform. Robinhood gives you the best possible margin rate. I believe right now, if I borrow money with my amount of money, I think I'm paying 5.5%. That's my interest rate right now. My home equity line of credit is like 8-point-something%. My insurance lines of credit on my insurance policies is like 8-point-something%. Think about that. They're charging me 3% higher. Yeah. So, yeah. And it's available at any point in time, at any point in time. So Robinhood will give you on quality stocks. So not pennies, but like, SPY, QQQ, Palantir, like solid companies. They're going to give you roughly 50%. By the way, not financial advice. Everybody do your own research. I'm just telling you what I do. That's it. They'll give you roughly 50% to buy more stocks, or use the money for cash to pay bills, whatever you need.
Meaning, if you put in 100,000, they'll give you another 100,000 on top of that.
If you get in 100,000, they'll give you 50,000 that you can lend.
50, right? 50. Yeah.
It's more if you want to buy the same stock, but let's talk about if you're not buying the same stock, you want to buy something else. But Robinhood will also give you half of the half, which is 25%, as margin for options, any type of option trading, whether it's long options, short options, spreads, whatever, options and futures. The money that you use to sell options is going to be margin. However, it's only margin if they get assigned legally. Until it gets assigned, it's something called an IOU. It's a collateral. The collateral is not marginized. You don't have to pay rates for it because you didn't officially buy the shares. So if you don't buy the shares, the IOU is just that. It's an IOU that says, Adam has the money. We got your back. We will give you the money to buy those shares if you need to.
Well, let me just break it down for everyone even simpler. That means if Adam is selling a put on Robinhood at $55, that means he's willing to pay $5,500 for 100 shares at 55. He can use margin, and it's not unique to Robinhood. IBK, all these platforms do it. Robinhood just has really good rates. He can get $5,500 from Robinhood that he pays no interest on to collateralize the $5,500 he has to pay if he's assigned. If he's never assigned, let's say Robinhood stays above 55 for the next month, he gets to keep the premium. He gets a return from that premium divided by the collateral, and it's not even his collateral. It's someone else. It's Robinhood's money or IBKR's money. It is just a fascinating way of using leverage. Obviously, if you get assigned, you have to have the money to be able to buy those $5,500 worth of shares, and then you pay the interest if you're using that on margin. But outside of that, there's no other game I know in the world of business that does something like this.
And it's not naked calls or options. People are like, oh, it's naked option. It's not. You have the collateral. The collateral is there. It's the margin that you could use, and the collateral is the shares of stock that you own. So it's not naked. You have the funds. For example, I have a $655,000 marker on SoFi alone that I've been rolling since February. My strike price is $14. SoFi right now is roughly $14, $13.60, whatever. I was rolling it since February. I just made $21,000 3 or 4 days ago. And I didn't have to pay interest on any of it because I didn't actually buy the shares yet. I'm just rolling forward, rolling forward, rolling forward.
Right.
Now, sometimes it could get assigned, and that's what helps the brokerages. They get their margin, they get paid, and they should get paid, right? That's what incentivizes them. So Robinhood gives you this amazing feature where you could be your own finance universe. And this is what I mean by the more money you put away, the more money you could borrow, the more money you could make. And it's literally so on and so forth. That's why in my videos I say selling options is the closest thing I know to printing money. It's like dividends on steroids. But the first part is it's literally printing money if you're doing it the right way.
And Chris Camillo talks about this as well. Whatever you got to do, get the money, put it into the account. Just build up those reserves, and you look back in 5 years, you have a lot more access to capital that most Americans will never have access to because they just don't have an investing account.
Yeah. It's unbelievable, dude. It's unbelievable. And the amount of people that are not willing to learn or ignorant about the fact, even though I'm trying to explain as much as possible in the comments, sometimes they come out, and most people are super cool, but you got some trolls here and there that are like, you changed my life. God bless. Scott, 100%. Changed my life. Changed my life as well. I would not be here. I couldn't do this on TD. I couldn't do it on Schwab. That's why everybody's moving over. Anybody can do this.
Let's answer this question. So Joseph says, so you're rolling forward an option that's not in the money with someone else's money. And then when it's in the money, it's now your money, or you roll it again. Really that simple. Yeah.
Yeah, except the other way around. So you're rolling forward an option that's not in the money. Mines are in the money. So I'm rolling underwater calls. So it's exactly what you said, but bro, balls of steel. So I'm rolling underneath. So I was rolling $14 strikes to $14 strikes when SoFi is trading at $10.30. That's as low as I was able to roll it in those days. So exactly what you said, but you're actually rolling them in the money for more in the money, collecting premium the entire time, lowering your cost basis. And now my cost basis for those 14s are actually like $12.75. So even if I had to buy it, I'm good.
And the reason Adam was doing that is because he believed SoFi would eventually get to 14. Right now, if SoFi goes to 7, it's like it's a tough position to manage. But if you're and this is where the research on the actual stock matters. If you're pretty confident that this stock is anywhere worth from 14 to 18 and it's at $10, you're doing an in the money put. You're collecting a lot of premium because currently it's out of money. But as it gets in the money, you're using that $650K that's not your money to be able to generate the return off the belief that eventually the stock will get to where it needs to get to. It's a risky thing to do, but it's also one of those things that is possible. And if you understand the company pretty well, you can obviously benefit from it as well.
I'm using tons of technical analysis for that, by the way, to stack it, as well as micro and macro data. But for example, my brother, I'm coaching him through it, and we do $13 strikes for him instead of 14 because we give him safer plays, right? So, yeah.
Matt Money right there saying, I do this with Rocket Lab and iBit. All right, so let's talk about the elephant in the room. We got a lot of people saying, all right, cool, Adam, sounds good. What happens in a bear market? What happens when things crash? What happens when things get ugly? So walk me through what you did on Liberation Day and how you navigated the month of April.
Yeah, first of all, shout out to Matt. I wish you could talk me through Rocket Lab if you have a moment. I really want to get into the stock in general. And I know I know you're the man on it. And Matt's been selling options even when I was talking about Palantir. He's very strategic with when he sells them. So shout out to Matt, bro. Tons and tons of knowledge. This guy's super underrated YouTuber, if you want to call him a YouTuber, but puts out content. Shout out to him. So a lot of people are going to say, what happens in the bear market? Exactly what you just said. And I love it. And that's why I made playlist literally saying, if you guys are new to the channel, I have a playlist managing underwater calls, underwater options, where I'm managing $1,050,000 of underwater. Everything's underwater. I had Robinhoods, which are expiring worthless this Friday. Done. I had MSTU expiring worthless this Friday. I got out of those. And the only thing I have left is SoFi, which is even Steven, more or less. Markets don't stay in one position. Markets go up, markets go down. In a bearish divergence, there's still bullish opportunities. And in a bullish divergence, there's still bearish opportunities. What that means is you got to just live to fight another day. And the worst possible scenario that can possibly have happened happened. We had the worst possible market, the worst possible drop that you can possibly go through on that early April. And I was underwater on everything. I had $44 strikes on Robinhood. Robinhood went down to $37. I had $14 strikes on SoFi. SoFi went down to $10.
Yep.
I had $7 strikes on MSTU, and MSTU went down to $3.50, $4, something like this. Nvidia, I had 100-something calls. Nvidia went down to $95. Everything that could have happened that went possibly wrong, that you can never sleep at night, happened. Guess what? Calm as a cucumber. Did not sweat 1 ounce, not a bit whatsoever. You just need to know how to manage this and be cool. This is how it works, guys. For me, do whatever works for you. This is not advice. I will sell options 4 weeks out. I don't even look at the options until the last week. So my options expire this Friday. I start managing it this Monday. If it's really underwater, I'll start managing it a week early, which I had to do with these plays that I'm talking to you right now. If you are really, really underwater, you try to manage them and go 1 month out. If you have to, you could always roll 6 months out, a year out, which is what I did with Tesla at one point. I rolled it like a year and a half out, got out of that position. I remember speaking to Ahmed. You could also roll out and down when selling cash secured puts, and when selling covered calls, you roll out and up. And it's as simple as that, man. You know, as long as you have a strike price and you have a share price. The share price is whatever the stock is trading at. The strike price is whatever your contract says you have to buy or sell your shares for. And then you have a cost price. Cost price is your strike price minus the cumulative collective premium collected. So if you sold the contract, you collected 50 cents. You rolled it, you collected another 20 cents. SoFi is trading at 14. You got to buy it at 14. You're actually paying $13.30. You got to understand that. Those are 3 terms that you need to know: strike, cost, and share price. When you're managing it, as long as you're within 20 to 30% of the share price, right? The strike is, and the share price is 20 to 30% away, you can still be able to roll it even Steven, which means the premium you're collected will cover the premium that you owe. You're not going to make much money.
But you're not going to lose.
You're not going to lose money. You're going to be even Steven. So my original SoFi plays got me roughly $21,000, $22,000. At one point, I had to roll it, and I only made $4,000 or $5,000. So that was the worst thing that happened to me. Another roll, I collected $12,000 instead of 21, 22. And right now, I collected.
It's almost like hot potato. You know, you're letting it marinate before things get back to where you need them to be.
Yes, hot potato, but a lot more things go into it. So it's not a guessing game. It's a technicals, and you put a lot of time into it. But if you know how to manage it, you're good. And as you do that, as long as it can be 20 to 30%, you'll be okay. But if it can be between 10 and 20%, then you're probably going to be making half of the money that you already collected. So if you sold it for 10,000, you're going to get 5,000, which means the premiums you're collecting covers and then makes some. And if you're within 3 to 5%, you're golden. You're going to make actually more money rolling it than originally you collected, which is crazy. Crazy, crazy, crazy. And if you know these things, you could sleep well at night. The market always comes back. It could take a year. You could roll this. I was rolling Palantirs for like 9 months straight. I remember telling Ahmed, like 9 months straight. It is what it is. You just keep rolling it. Keep rolling it.
You had some covered calls when that thing was like 17, 18, and you got out of it, but Palantir kept running. And you just said, you know what? I'm going to keep rolling it, collect my premium, and eventually it'll work out.
Yeah. I don't think I've ever been assigned. I'm sure it happens. I don't think that I've ever been assigned. I don't think I've ever been assigned unless I want to be assigned. So right. I was able to, maybe it happened at a small, amount, but for the most part, I've been highly successful in this.
And I agree with Matt Money right here. Look, what Adam's saying, even if he's saying it in a way that makes it sound easy, the amount of conversations that we've had, the amount of videos that he's watched, the amount of research he's done, the amount of ChatGPTing of like, hey, if this goes wrong, what happens? As Matt says, it requires a crap ton of discipline, but it's possible. That's the point. And in this country, that's all you can ask for, the chance, the opportunity. And if you put in the work and you actually learn this stuff, just like if you learn to code, you have to learn how to code, right? If you learn, you know, how to play basketball, you have to be in the gym every day. Everything requires work, but it is possible. And to make $4 or $5 grand clicking a couple buttons on your phone because of your intellect and how you know, or how you have a perception of what you know, you think of how the market's going to play out. I mean, that's a hell of a life. That's a hell of a life to be able to do that.
Guys, and I'm telling you the worst possible scenarios. Like, I'm telling you, I'm managing that SoFi $650,000 on the line. What's the worst that's going to happen? I buy SoFi at $14 minus all the premiums that I collected. Like right now it's $12.75. So what's the worst that's going to happen? I buy SoFi, my average is $12.75. So what? So what? Then you do it on the offensive. You do wheel strategy. The wheel strategy is when you are now selling covered calls on the shares that you just bought, and vice versa. If you sold shares, now you do a cash secured put, which is now the wheel strategy. So what's the big deal? You buy the shares that you wanted of a company that you like and appreciate and know a lot of at a discount. People are like, oh, you're going to get assigned. So what?
Right. You, at the end of the day, you need shares to build wealth, right? So, all right, at some point, you're going to have to buy some Rocket Lab. You're going to have to buy some Tesla if you really want share appreciation over the long term. Matt Money saying right here, I sold the January 2027 $40 Rocket Lab put. So he's betting that Rocket Lab will be 40 by January 2027, collected $6,900 of premium. He could buy it back today, given Rocket Lab is closer to 40 than it was yesterday, for $5,700, and he could pocket $1,200 in a week or whatever, and use that collateral in order to make some of that premium. It's just, this is a way more liquid market than real estate, and it takes a lot of discipline, but it is possible.
Yeah, everybody has like a different style. So shout out to TJ. TJ, probably one of the biggest guys coming out right now. And TJ does a completely different style than me, right? Sometimes I look at his style and I'm like, oh, it's completely different. That's great. Everybody has a different style. Like what works for him super successfully and what works for me super successfully is completely two different styles, which I talk to Ahmed all the time. I'm like, oh, he has a different style than me, blah, blah, blah. The style that you have works for you. And I'm sure Matt Money does a different style and Ahmed does a different style, right? You got to figure out, first of all, what you're looking for and what you need. But there's always the option of getting out of the option early. You buy it back for a lesser amount, so on and so forth. And there is a lot of things that goes into it. I'm maybe oversimplifying it, but it's as simple as technical analysis, microeconomy, macroeconomy, and you follow it. I mean,
yeah. And for those that are saying, well, in a market crash, this doesn't work. It's like, first of all, in a market crash, everyone's losing money. Right. So it's not like this is just now, nothing's working in a market crash. Second of all, if that's your attitude towards the markets, you shouldn't invest in the markets, because in the long term, markets recover. They go up. This recent recovery we had was a bit more aggressive in terms of how fast it was than other recoveries, but we're also in the greatest technological revolution of all time. And so, yeah, there are some macro tailwinds that are helping this market right now. But if there's a crash, everyone loses money. If things are relatively stable, even if things are not going to the moon, there is a way to play the volatility.
Yeah, but I highly suggest, and I started the channel just to give back. I highly suggest you guys check out the channel. I started making videos about managing small accounts. I literally go through how I manage underwater plays. I go over my technical analysis. I'm super duper transparent. I'm not one of these big accounts talking about last chance to buy Nvidia, Palantir, watch before Monday. I'm not that account. Like, I'm not that account. I'm going to be doing a webinar right now. It's going to be for free. Limited seats because people asked me. I ended up doing I'm going to do a free webinar. Some things are going to be posted soon, so please definitely check out the channel. And everything is real money. And at the end of the day, I don't care if you believe me or not. I don't need this. I show some of my numbers. I'm retired at 42 years old. I retired at 41 years old. I've been doing it now in a retired mode. This is my source of income for over half a year now. I know it's not a long time, but at the end of the day, how many YouTubers on here are legitimately retired at 42 years old, sharing their secrets, not asking you to pay them any money? You know what I mean? That's all I got to say. And you guys saw me from my other channels. I've been talking about these stocks doing exactly what I said I was going to do, but I actually did it from the old channel.
People remember you, bro. People have been asking me for months, dude, where is he? Where is this guy? There he is. He's been killing it, doing what he's doing here. A couple rapid fire questions, Adam. How much money do you think someone realistically needs to get started with this?
To get started, it's all relative. Some people are going to say, oh, $100 a month is not a lot of money for me. But okay, well, if you only have the capital to make $100 a month, well, then $100 is a lot for you. If you have the capital to make $1,000 a month, 1,000 is a lot. So just work backwards. If you have $100,000, you're going to make roughly 2% a month. Times that by 12 months, you're going to make roughly $24,000 on $100,000 pre-tax. If nothing goes wrong, you don't have to manage, so on and so forth. Premium gets lowered if you have to manage, so on and so forth. And then work different. So if you have $10,000, you can make $2,400. If you have $1,000, you're going to make $240. Work backwards.
Yeah, a lot of it is just relative, but the point is you can do this with literally $1,000, and that's why it's
which we have. We were doing it, bro. When we ate dinner, bro, I was showing you the account. This is how it started. I was selling options on my Palantir shares. I was getting 1 penny per share. 1 penny per share. So it wasn't a lot, but it adds up.
It adds up. Dude, look, like you could sell some Nvidia calls today. If you have 1,000 shares of Nvidia, you could sell 10 contracts and probably make maybe $3 selling the 147 strike or something. But that's $30. $30 is still $30. Like that, and that adds up weekly, monthly, and then the more shares you have, the more money you have in general. It's all relative, but it is one of those strategies that is very exciting.
And I just addressed a comment, and it's really crazy. So Adam, I see, shout out to you, no disrespect. He says 2% a month is not sustainable, right? I hear these things all the time. Yet, I am living, breathing proof it's been sustainable for years. Guys, check out my other channel. It's open. The reason why I brought back my videos is called Palantir 3030. I talk about option selling. I was doing this as far back as 4 or 5 years ago. You could say whatever you want. It's not sustainable. And I'm not promising you that you're going to get that. But I'm just saying that on average, I beat that 2% a month. I believe TJ is doing better than 2% a month as well. And TJ has been doing this for a while.
I'm doing better than 2%. A lot of option sellers that understand kind of how they're navigating it and that have access to more capital, you're able to beat that. But two, if you want to get 1.5, that's still 18% a year. That's beating the S&P on average by double. Like you can get more conservative with it, but the point is, and even if it's 1%, okay, 12% a year, but now you're bringing in income. It's not just stuck in the S&P 500. So the pessimistic mindset towards it means you're never going to have a chance to learn about it. And if you think it's a scam, then don't get into it. But I think there's just too much. The fact that Warren Buffett sells puts means that it might not be that much of a scam.
Yeah, and I hate to say it, bro. Adam, I'm sorry, and I love your name, but you're never going to make it, bro. You're not. You're going to be working until you're 65 years old because you have a pessimistic mindset. Instead of trying something out and saying, hey, let me put away $1,000, $100, $100,000, whatever you can put away on the side, instead of opening up a second account and trying this to see if it is sustainable to get 2% a month, you are saying it's not sustainable. Well, who the flying fizzle are you to say that it's not sustainable? Like, who are you? What is your credibility to say it's not sustainable when I'm telling you that I'm making it? Now, I don't care if you guys make it or not. I'm just telling you my numbers. Amit does it. Invest with Henry does it.
TJ, Mad Money, Steve sells options. Like it is. I think that I agree with what you said right there. Like, if you don't believe it, open a paper trading account and just try. And if it's possible, then maybe it's more believe. I mean, this is the same mentality that most people have about the stock market, that it's not possible. And then you have a day like in like Palantir when we hit 133 on Monday and people are up 10, 20,000. It's like, no, it is very possible. Like it very much is possible.
Right. Let me get on my channel. I always say this is the beginner's Bible. Like anybody that you will talk to about option selling, I don't care who they are, is going to tell you this is the beginner setup. Ask Matt, right? Matt, just say yes or no that this is the beginner setup for anybody starting in options. You're going to go 4 to 6 weeks out. You're looking for roughly a 20 delta, which gives you an 80% chance in your favor, and you are looking to make 2% a month. So if it's 6 weeks, you're looking for 3%. If it's 4 weeks, you're looking for 2%. If you are up 80% on the play, roughly, buy it out, move on to fight another day. Matt, tell me if that is not the Bible for beginner option sellers, because every option player will tell you the same thing.
Yeah.
And the reason they're saying, go ahead.
I met a guy in Toronto and he's a day trader. I think I talked about this a little bit the other day. He's a day trader. I don't want to get super into it, but he's making like $30,000 a day. And he showed me the numbers, bro. He I had lunch with the guy. And I'm just looking at this like, there's no way you're doing this. And he's showing me, and he explains to me for 2 hours how he's doing this day trading. He gets in and out within 5 minutes of the market. He figured out his own system. He has his own leverage. He has all these fancy screens. And I'm looking at the number. Like, I cannot be like, so the point is, it is possible. It's not probable if you're not putting in the work and the time. And I'm definitely not gonna be able to do that because I don't day trade. I don't know that stuff. But the point is, there are people that take risks with their life and they find a way to escape the sort of rat race that has been told to us that we need to be in. And option selling to me is not as lucrative as day trading, but it's a lot more safer. And there is a world in which it could happen.
Yeah, man. It's amazing, bro. It's changing lives. You're changing your life too. But again, everybody's path is different. My path is not yours. Your path is not mine. My path is not the people in your chat, so on and so forth. Everybody has to find their own inspiration. Everybody has to find their own ways. Everybody needs to find what works for them and just apply it and just enjoy life. Try to be as early as possible. Enjoy your family if you have one. If not, enjoy life. Just go breathe some fresh air and do a vacation or something, you know? And I hope everything works out for everybody.
And the most important thing right here, everything's much easier when you amass resources. You know, you've made money in your life, which is helping you do this. The more money you have, the easier it gets. 1% on a lot of money is a lot of money. So you don't need to get a high 500% return, but you do need to have a lot more income.
Yeah, this is the calm for me, right? I went through the craziness, which I was calling Ahmed all the time, freaking out. Dude, don't get me wrong. I couldn't sleep at night. It was terrible. The markets were collapsing. It was so bad. And I went through this for like roughly 18 months of ups, downs. It was terrible. This is calm. I know it sounds crazy managing a $655,000 position, but honestly, the worst thing that happens is I buy the SoFi shares and I have a 650 marker. I paid, I don't know, 550 for it. So I'm down 100,000, but I own the shares of SoFi. I still have my SoFi shares.
And SoFi's not a shit company.
Correct. And I think that it's undervalued. So you don't do it on a company that you think is absolute, poop. You want to do it on a company that is legit. So if you love Robinhood, you do Robinhood. If you like SoFi, you do SoFi. If you like Palantir, you do Palantir, so on and so forth. I don't do it on companies that I don't know. I do it on the same exact 4 or 5 companies, and more specifically 2 or 3 companies. Every single month, the same companies over and over again. Robinhood, some type of crypto play, usually MSTR or MSTR derivative. SoFi, sometimes Nvidia and Tesla, so on and so forth.
These are companies that I think will be around 5 years from now,
Sure. What's the worst case? What's the worst case that happens? You buy the shares. So I don't get it's not like you lose the money. You're buying the shares at a cheaper price than you were willing to buy it. So if today SoFi, Robinhood is what, 60 right now? Robinhood is $60 right now. You're going to tell yourself, okay, I'm willing to buy it for 60, but you know what? 55 is better. I was happy at 60, but 55 is better. So sell a covered call, cash secured put at 55. Rinse and repeat, Elaine. There you go. Elaine had, if I'm not mistaken, Elaine was doing covered calls and she had a massive Palantir position. If I'm not mistaken, that's her.
Elaine has a lot of Palantir.
Yeah.
And she doesn't want to lose her Palantir, so she does very low delta strikes. But when you have thousands and thousands of shares, that little amount of premium adds up.
That's what I was doing. That's why I was getting like 1 or 2 cents a share. Super low delta, like 0.05, whatever I could get. I was doing it weekly. And I was just collecting my 1 cent per share, 2 cents per share weekly, and just keep rolling it, right?
There you go. There you go. All right, Adam. I love you, brother. This is Adam's channel, Retired ASAP. That is the name of it. You can get more details on what he's doing on this channel. I'm linking it. It's also pinned right here in the chat. But yeah, look, Adam is a friend of mine. He's been over to my house. He's fucking beat me in chess. I was very close to beating him, but he got me. We gotta get a rematch, dude. I gotta get you in this. But he's been playing chess for a while, so he's really good. And he's a really good friend, and he's not trying to sell you on some bullshit. He actually just cares about building his brand. So I would definitely check him out, subscribe, watch a couple videos. If it's not for you, unsubscribe. But if it's for you, then you can stay part of his community.
Thank you very much, Ahmed. I appreciate you. God bless all of you guys. Have a great that you're absolutely killing it and your entire community is killing it. We're proud of you and you are proud of your community. Thank you, guys.
Adam, appreciate you, brother. Talk to you later.
Take care. Bye-bye.
Later. All right, there we go, folks. There we go. Adam, he's an awesome, awesome, awesome guy. Happy to have him on the show for today. And long stream, 12 p.m., 3-hour stream. But we are done for now. So, yeah, in terms of option selling, look, I'm a big proponent of it. I think I'll have a lot more content coming out in the future of it. Adam, again, does it for a living. He's making good money off of it. I think anyone can do it. And, it's something that I think more and more retail investors. I mean, the fact that Robinhood has 500 million option contracts traded a quarter, that's only going to grow more and more and more and more and more. And I think the industry for selling options from a retail perspective versus buying is starting to shift. A lot of retail still gambles and buys these 0 DTE options. I think more and more people are going to see Adam's content, TJ's content, my content, be like, why the hell am I buying this? Why am I not being the house or the casino versus the gambler? And even Triple V, right? Triple V used to gamble and buy a lot of options. And now even he's realized, this is kind of stupid. I have a lot of money. I could just sell these contracts to a lot of people, collect all that premium, and then live to fight another day and just keep doing it over and over again and rinse and repeat. I did an options video right there that's linked in the chat from I'm Beneficial. 3 hours. Do not pay for a course. Please never pay for a course on options or option selling. That 3-hour video, I think it's like 3 hours and 40 minutes. It goes well into all the nuances, all the dynamics. It is super slow. It's not super fast. It is the very, very basics. I pulled up a PowerPoint presentation to walk through it and plenty of examples in Options 101. So please do not spend hard-earned money paying someone else to teach you how to do this shit. You do not need to do that. AI is more than good enough. You ask ChatGPT one question, she'll give you essays on how to understand it and navigate it. Give it screenshots. It'll analyze the screenshots. Like, you just don't need to be paying anyone for this. You don't need to be paying some stupid Discord membership. Everything's out there in the world. You just got to put in the time to learn it and then go implement it. That's it. And then go implement it. All right, cool. That's it. Thank you, everybody. Let's do word of the day. I'll be back at 3:45 for the market close. Hopefully we'll have Steve on the show today. Maybe we get Matt Money on the show today. If he's working from home, maybe we can get Matt Money and we'll get their thoughts on the market. Word of the day is Zarf.
Zarf.
A handleless ornament holder for a coffee cup. The waiter brought out streaming espresso in a silver Zarf. She spotted the dusty copper Zarf in the antique shop and made an impulse buy. Okay. Now I'm curious what a Zarf looks like. Okay, Zarf coffee cup. What does this look like? Oh, this is what a Zarf is. I think I've seen these before. Yeah, this right here. There you go. Very elegant cups to be able to consume different beverages. There you go. That's what we got. Word of the day. That is Zarf. Checking up on some of these stocks. We got Robinhood 61.90. That's up about 2%. Tesla 347. Nvidia 134.70. Palantir 128.09. SoFi trying to make its way back to 14. Get Adams puts in the money here. 13.90, 2.36%. PayPal 71.77. Meta 6.34. And then the broader S&P 500 is green on the day. 591, slightly green. We do have a lot of options expiring over the next couple hours. 1.4 trillion. But markets relatively holding up. S&P at 591 and then Palantir 128.04. All right, cool. That is it. That is it for me. Thank you, everybody, for being here. Market close will be back. I'll try to get on Matt and Steve, and no Palantir Weekly tonight, but we'll be ending out a pretty good week in the stock market. Pretty good week in the stock market this week. For those that can't make the market close, again, appreciate all the love and support on the channel this week. We did cross 75K. So again, thank you, everybody, for subscribing and being here. We were at, I think, 70K last week. So yeah, it's getting to the point where the growth is getting a bit more non-linear. And I just want to make sure that everyone feels welcome in the community. Everyone feels safe being in the chat, and everyone enjoys people like Adam, Matt, Steve, Chris. I mean, I was talking about this last night with them. It's really cool that it's just a bunch of random dudes in the community that are passionate about making content. You know, Matt, Chris, Steve, like these guys just love hopping on the show. They're not some formal contributors that are part of the show. They just they love hopping on when they have time and talking about stocks. And it's a really organic, authentic community here. and it's growing, which is very nice. So it's super, super, super fun to be doing this every single day. And we'll just keep doing this and keep growing and keep doing what we have to do. All right. Thank you, everybody. Appreciate it. I'll be back on the market close. We'll see you then. Get some lunch. We'll be back in a couple hours. And if I don't see you on the market close, I'll see you on the Sunday Futures show. Bye, everybody. Have a good one. Thank you all for being here.